frankly, every Oklahoma company that's a small business to ask their CPA this year when they're filing their taxes, what if the Tax Cuts and Jobs Act expires next year? What would my taxes be next year? And have small business owners ask that question of their CPA, and I think they will be quite surprised based on all the rhetoric to say this is only about big companies and wealthy people, that every small business will quickly find out, oh, it's them as well. It'd be the same thing on the child tax credit. If Tax Cuts and Jobs Act goes away, it gets cut in half in the child tax credit, and all the inversions that were happening under the Obama administration where American companies were being bought up by foreign entities. Now that's actually switched. Now American companies are buying foreign companies and those jobs are coming here. So there's been a tremendous amount of benefit in that. The one challenge that we've had on this committee has been a conversation with Janet Yellen about Pillar 2. And it started really 4 years ago now, 3 years ago, where the conversation was about, well, we really don't need Congress to act on this. We feel like we can do unilaterally. We can change America's tax policy for all businesses in America. And now in the last year, they've shifted to say, well, we're going to have to come back to you at some point to be able to get this. In the meantime, a deal has been negotiated that literally helps European countries and hurts the United States on this. And they negotiated a deal that exempts China from being affected by this at all. My question to you is, are you going to engage on this issue of Pillar 2? Number one, have this committee involved in writing taxes, which seems to be consistent with the Constitution. And then what is your message to other countries if they try to implement Pillar 2 on American businesses?
Thank you, Senator. As we discussed in your office, Senator Langford, that I believe that any, especially European country, but any country that in the next few days before President Trump takes office is intent on implementing Pillar 2 will find it a grave mistake. That the taxation of U.S. companies is a sovereign issue, and that authority lies with this Congress, and I will respect that. I will work with you to undo what I think has been a terrible policy.
Yeah, which I would agree, and many members in this committee would agree, that not only they went around Congress violating the Constitution, but it deliberately hurt American companies. And I just think that's really terrible policy on it. It truly was America Last policy. On the energy side, you've talked a lot about energy production. I'm Oklahoma, and unashamedly, we're all the above and all the below energy. We probably have more wind and hydro and solar production in my state than any other state on this dais, with very few exceptions, but we also use oil and gas. And we're going to produce all the energy that our state needs to be able to make sure that we stay stable on that. One of the issues that is a business issue for small or large businesses that I've been fighting for is a stable bonus depreciation amount. This is not about the type of energy or the type of business even. It's if you're actually investing in your company and trying to grow your company, that you would know what that bonus depreciation. Now, this will help with pipeline productions, but it will also help a pet shop and a hair salon and a restaurant just as much as well. And so thoughts on bonus depreciation and just a stable rate for that?
So, Senator Langford, you're referring to the 100% immediate?
Yes, what has been in the past, but for, quite frankly, a stable rate, period. Right now we have a diminishing rate that's unpredictable.
Yes, so I think that increasing the after-tax return on capital for U.S. companies, especially small business, is one of the greatest forms of job creation that we could see. Yeah. And to go back to your point on energy production, we've heard much here today saying that we are at a record amount of energy production, and we know that's a canard. We are barely above where we were in 2020, and if we were to look at the Department of Energy projections for 2024 and 2025, we are well below those. The past 4 years, we have seen U.S. production constrained, and part of a fulsome sanctions program would mean that we need more energy production in the U.S. to make up for the loss of sanctioned Russian oil to protect the U.S. consumer.
Right, which is American jobs, which is American income, which one of the things we're going to have to deal with is the intangible drilling cost punishment that was actually put on all the independent oil and gas companies in my state and everywhere else that drives up the cost for consumers as well. That's another issue that this committee needs to take on. Mr. Chairman, thank you.
Thank you. Senator Hassan.
Well, thank you, Mr. Chairman, and again, congratulations on your position.
You
I
are
look
listening to the
forward
Senate
working with
Finance
you
Committee
and all
questioning
of our
Scott Bessent,
colleagues
the
on
nominee for
committee.
Treasury
And
Secretary,
thank you,
currently
Mr. Bessent,
questioning
for
him
being
is
here.
Senator Maggie
Congratulations
Hassan.
on your nomination and for your willingness to serve, and welcome to your husband and children as well. We are grateful for their willingness to share you with the country. I appreciate you meeting with me in this process and sharing your priorities at Treasury if you are confirmed. And I want to follow up on some of those topics today. I also just want to associate myself with the comments of my colleagues, Senator Bennett and Senator Warner. I certainly believe we need to cut taxes for working people, and we need to make sure the wealthiest pay their fair share. And with regard to Senator Warner's comments on sanctions, you mentioned if Vladimir Putin is watching this hearing, he's not the only one watching this hearing. China is watching this hearing, and we have talked about the importance of making sure that we are not only competitive but outperforming China for economic purposes as well as for national security reasons. And as important as a resolution in Ukraine is, history tells us that appeasing tyrants at the expense of freedom fighters never works. And it is critically important not only for the Ukrainian people and for the freedom of all of us, but it is important because China and North Korea are also watching what we do and watching this hearing and how we will go forward imposing sanctions. To turn to some of the topics that we discussed when we met in my office, the research and development tax deduction was one of them. It's critical to helping us outcompete countries like China. Currently, China provides a 200% super deduction for R&D, while American businesses can only immediately deduct 10% for R&D. I've worked with Senator Young on a bipartisan effort to restore the full and immediate R&D deduction. So do you support restoring the full and immediate R&D deduction? Will you work with me and my colleagues to get this across the finish line in Congress?
Senator, I enjoyed the meeting in your office. I am not fully versed in this, but my inclination is that this is something that I would support, and I will get back to you, if confirmed, I will get back to you very quickly on it, and we'll make it a priority.
Do you agree it's an important tool for American companies to improve their competitiveness?
Yes, Senator.
Thank you. One of my other top priorities is working on a bipartisan basis to lower costs for families. Under President-elect Trump's policies, do you believe that prices for families will go up or down?
I believe that inflation will be much closer to the Federal Reserve's target of 2%. And I believe that what we have seen over the past few years is that the bottom two income quintiles have a very different basket of goods and services. So there are two ways. We can either lower cost or we can get real wages up. I would hope that we would be able to do both.
So you believe that President Trump's policies will further increase wages and lower inflation?
I believe that they will increase real wages and lower inflation closer to the Federal Reserve's 2% target as it did during President Trump's first administration.
Are there any specific policies proposed by the president-elect that you expect will increase prices for families?
There's nothing I can immediately think of.
So that's a no. If the president-elect were to propose a policy that you believe will increase prices, would you advise against it?
I would speak to President Trump about it. It is his decision. And I believe that we think that if we look back, that it is a complete composite return in terms of aggregate inflation numbers. And I think it's very difficult.
Well, I have limited time. So if you believe that a policy that is proposed by President Trump would increase prices, would you advise him against doing it? Yes or no?
I can't answer that question because it's a hypothetical.
All right, let's move on to, when we met prior to the hearing, you told me that President Biden was responsible for increased prices over the past 4 years, something we can litigate, but I don't want to right here. By the same token, I assume you would agree that if prices increase in the next 4 years, President-elect Trump would be responsible.
I think there could be a variety of reasons. I think that it could be we will see the policies of the Federal Reserve, the spending policies. Congress sets the spending policies.
So, look, I'm gonna cut to the chase because I'm out of time. But at the end of the day, what you're articulating is a double standard, and it's disappointing to me. Thank you, Mr. Chair.
Thank you. Senator Daines.
Chairman, thank you. Mr. President, good to have you here this morning. I think we're seeing here
You're
in this
listening
committee
to
is
Senator Steve
do have
Daines.
a
Question,
divide
Treasury
between two
Secretary
very
nominee Scott
philosophies
Bessent at his
about how to go
confirmation
forward
hearing with
and
the
what's
Senate
best for the
Finance
American
Committee.
people in this economy, what's best for global competitiveness. I remember sitting right in this chamber as we were debating whether or not we should launch the multiple trillion-dollar massive spending bills, which was a $2 trillion COVID bill, the Inflation Reduction Act, massive multi-trillion-dollar bills that even Democrat former secretaries of Treasury said could be inflationary, and indeed it was. You compare that outcome to what we are going to return back to the policies of the prior Trump administration, that when you lower taxes for businesses and the American people, you create more tax revenue, you create more economic activity, you create more wage growth, particularly for minorities as well. And you start to get back into winning in terms of global competitiveness. We stopped the inversions. It was absolutely like, boom, went from multiple inversion to zero once we moved forward with this. And I couldn't be prouder of what we did boldly back during the Trump administration. We tried to fight against during this administration these massive out-of-control spending bills that were inflationary, and the American people suffered greatly with these high levels of inflation, higher mortgage rates, and so forth. And so I'm glad to have you as our next Secretary of Treasury work with you to restore sanity back to where we were under President Trump. So congratulations on your nomination and your willingness to serve. With the expiration coming of these tax rates, we're facing a $4.3 trillion tax increase if we don't act this year. As we begin drafting this bill, and I applaud Chairman Crapo, he brought us together as ranking member last year prior to getting the majority back, anticipating we might have this moment. And we started talking about what are some key themes. Then we got into the details over several months of working groups for this next tax bill to renew and protect, preserve the tax rates and prevent a $4 trillion tax increase. One of the key words was permanency. Permanency. I've expressed my support for the use of current policy baseline. I've expressed my support for permanency because we add uncertainty here in Congress with expiring tax code provisions. It's time to make them permanent, to take one additional burden away from the American people wondering what's going to happen with Congress, whether my tax rates will depend on what happens in the next election or what happens if Congress can act. Let's take that off the table with permanency. My question, Mr. Bessent, is you've said we need to grow our way out of our current economic situation. I couldn't agree more. And that's just the philosophical divide we face here. Somebody who embraces more the supply side idea, reduce rates, unleash capital into the free markets and let those markets decide where that investment relies versus a bunch of bureaucrats here in Washington with wasteful spending. How does permanency and certainty of the tax code affect our ability to grow out of these problems?
Senator Daines, I've enjoyed getting to know you over the past year with your work on the National Republican Senate Committee and talking to you in your office, and also discussing your history in the private sector, both of the big company and small companies. And a question like that makes it clear to me that you understand the incentives, that it is incentives that drive everything in tax policy. And I can tell you that since November 5th, for small businesses, we have seen the biggest increase in optimism since they have been keeping the metrics. So certainty, small business owners, many of whom they are pass-through corporations, believe that we will get the tax TCJA across the line. I think we could see a bigger increase in optimism. You know, in economics, when we have something we can't define, we call it animal spirits. And I think we are seeing animal spirits, a nascent move up, but permanency and forward guidance gives people certainty. We get capital and investment, we get hiring, we get real wages. Employers want to keep train and expand their workforce. So everyone wins with permanency, certainty. A kind of forward guidance for tax policy, I think, would be one of the things that could unleash this new golden age that President Trump has talked about.
Yeah, I want to make one statement. I know I'm out of time, Mr. Chairman, but when you take a look at the private sector jobs in America, it's about 140 million private sector jobs. 88 million of those jobs are from pass-through entities. That's about 63%, which tells me that, and that's the part that's expiring. I mean, the corporate rates are staying permanent. It's the pass-through rates. Those 88 million jobs, 63% of the private sector jobs are taking a look at what's going to happen here in Washington over the course of the next 6 to 8 months. Very, very important we make these rates permanent and prevent a tsunami of $4.3 trillion tax increase that will come if we don't act. Thank you, Mr. President.
Thank you, Senator Cortez Masto.
Thank you, Mr. Chairman. Mr. Bassett, good to see you. Thank you for meeting with me. Welcome.
This is Senator Catherine Cortez Masto, the Democrat from Nevada, now questioning Scott Bessent's, Donald Trump's pick to be Treasury Secretary.
Over 80,000 of my constituents in Nevada receive that premium tax credit to assist them in affording their health care coverage. And on average, these credits lower an American's health insurance costs by $530 per month. Congress provided an enhanced PTC in 2021, but that policy expires this year. And without the enhanced PTC in place, millions of Americans are going to lose their health coverage. So as the person most responsible for tax policy in the incoming administration, would you commit to opposing any attempt to remove or not renew these credits?
Senator, as we discussed it in your office, and as has just been a brief time since we met, I committed to you that I would research this. I have not had time to do it before this hearing, but if confirmed, I would get back to you with all deliberate speed in investigating this.
Thank you. I appreciate that. And let me just say you would agree that these tax credits, because they're current policy, they actually extend current tax policy costs, that you agree that extending current tax policy actually costs money.
I think I don't understand the nuance of that question, but I will get back to you on it.
Okay, I appreciate that. You have been supportive of many of President Trump's tariff plans, and I have heard the conversation there. So I am not going to go into that, and we've talked a little bit about it in my office. But let me jump back to these credits that were imposed that some of my colleagues are against, but they have benefited Nevada, and I want to talk to you a little bit about it. The 45X manufacturing tax credit supports thousands of jobs in the Reno area and billions in investment across my state. It also is key to reducing dependence on China for the critical minerals we need for our military and supports mining jobs in Nevada. We are a mining state. We are mining critical minerals. And so will you commit to opposing any effort to repeal or reduce the 45X tax credit, which is not just a benefit in Nevada, it's a benefit in other states as well, including Alaska?
So again, Senator, I am unfamiliar with that exact provision, but I do believe that it is important for us to mine, accumulate, and move to domestic production for rare earths and other vital minerals. So I will get back to you on that my thoughts on that exact program, but on a atmospheric meta basis, I agree with the direction of travel.
Thank you. Let me ask you this. We also talked about this. President Trump has stated that he thinks that the president should have influence over the decisions of the Federal Reserve. And we discussed this in my office, and I appreciate that opportunity. Does it continue to be your view that the Federal Reserve should be independent of the president?
Of course, and I actually believe that influence, there was, I believe, a highly inaccurate Wall Street Journal article saying that he believed something to the effect of he should be in the room. President Trump is going to make his views known, as many senators did. 3 senators, including 2 on this committee, called for, there was a jumbo rate cut in September, 50 basis points. 2 of the senators on this committee called for 70.
I'm not asking my senator colleagues. I get the politics on their sides. I'm asking you. But let me just say, you don't deviate from our conversation that you think that there should be independence.
I think on monetary policy decisions, the FOMC should be independent.
Thank you. I appreciate that. And then for the benefit of our colleagues, what you're referring to earlier is in our meeting, I asked you if there were any regulations, Treasury regulations that currently exist that you disagree with. And in response, and continuing in response right now, you're saying you're going to look into it and get back to me. Is that right?
Look, I believe, as we saw, I don't know if it's a regulation, but it's a policy, as we saw from the December 8th hack by some Chinese entities into the Treasury, which is very serious, that was through a work-from-home software app. So one of the policies that I support, I intend to be in the building every day that I am in Washington, and I support a return to the office, which is against the current Treasury policy.
Right, and I appreciate that. If there are any others that you oppose and you can share with me, it doesn't have to be right now, get back to me, I appreciate that.
Of course, I'm happy to provide that in writing.
All right, thank you. Thank you so much. Thank you, Mr. Chairman.
Thank you. Senator Young.
Mr. Besson,
This is Senator Todd Young now, the Republican from Indiana, questioning Scott Besson before the Senate Finance Committee live on Bloomberg.
Willingness to serve our country. I'll tell you what I'm looking for in a Treasury Secretary. I'm looking for someone who has a clear record of professional accomplishment, a distinguished academic record would be a bonus. You have those things. I'm looking for someone who is thoughtful. What I care less about is the performative dimension of the job. I have to tell you, there's a lot of chatter in Washington about that, but I do appreciate your thoughtful answers here this morning. So I'm going to dive in and begin by asking you about a dimension of your role as Treasury Secretary. You will inherit the role of chair on the Committee on Foreign Investment in the United States, also known as CFIUS, that reviews foreign investments in American industries. And very recently, President Biden blocked Nippon Steel's acquisition of U.S. steel on national security grounds. Yet he and the administration provided no clear, substantiated evidence, publicly at least, to justify this decision. For my home state, this abrupt action has instilled a lot of anxiety, particularly in the Gary, Indiana area, where there's nearly $1 billion in investments that were promised. If the Nippon-U.S. Steel deal were to reappear before CFIUS, sir, do you commit today to an impartial review, particularly when political pressure was initially permitted to overshadow an honest assessment of national security vulnerabilities?
Senator Young, thank you for the question, and I understand the imperative for jobs for your constituents in Indiana. President Trump most recently has also spoken out against the deal, but if the deal is...
The statute indicates that you are charged with providing impartial reviews. That's all I'm asking. Would you be following that law or not, sir?
Impartial reviews, sure. So it is currently in litigation. The review is closed, but if it reappears, that CFIUS, they will conduct the same review that it always does. Yes, sir.
Okay. Well, thank you. We may have an opportunity to work together on that effort. Mr. Bessent, your nomination comes at a time when tariffs are central to our economic debates, particularly on issues like inflation, supply chain resilience, and job creation. Now, I believe that in moderation, tariffs, for a time, strengthen America's negotiating leverage with other nations, and they can strengthen certain national security relevant industries. But overuse of tariffs can inflate costs and provoke trade retaliation. As Hoosier farmers have experienced firsthand over the years, they often bear the impact of these retaliatory measures, leaving already thin margins much more vulnerable. What concrete steps would you take to shield these Indiana producers if major trading partners impose steep duties, and how do you envision the Treasury Department's role in supporting them?
Thank you, Senator Young. As I mentioned before, and I may have mentioned it when I was in your office, our family is involved in the farming business, and soybeans and corn, so I'm very sensitive to this and very up to date. The American farmers have been very loyal. 90% of rural voters voted for President Trump, so they should know that their interests are his interests. And when you ask what I would do specifically, I have said recently, the Biden administration kept on all of the Trump tariffs, but what they did not do in the agreement with China was enforce the purchase provisions. So if confirmed, next week, if confirmed, I would begin pushing for the purchase guarantees that were in the China agreement to be enforced, and perhaps they push the Chinese for a catch-up provision over the past 4 years.
Just a quick follow-up. In terms of the application of tariffs, a skilled negotiator might sometimes use broad tariffs to gain leverage, and then in other cases, a more sector-specific approach could be effective. So what criteria or perhaps benchmarks would you use to inform your decision to go with across-the-board measures or more surgical tariffs? And do you believe there should be any built-in caps or triggers to prevent an unintended escalation?
Senator Young, I haven't been confirmed yet. President Trump isn't in office, but I would imagine that the American people, should think about tariffs in 3 ways under the Trump administration. One will be for remedying unfair trade practices, either by industry or country, the Chinese tariffs, the steel. 2, maybe for a more generalized tariff as a revenue raiser for the federal budget. And 3, President Trump, I think, has added a 3rd use of tariffs, as you said, as a skilled negotiator he believes that we've probably gotten over our skis a bit on sanctions, and that sanctions may be driving countries out of the use of the U.S. dollar. So the tariffs can be used for negotiations, whether it's for Mexico on the fentanyl crisis. I think you and the American people should think about those 3 broad categories.
Thank you,
sir.
We need to move on. And next is Senator Sanders. Senator Sanders, I don't believe you were here when I welcomed everyone to the committee this morning, but as a
We hear next from Senator Bernie Sanders.
I personally welcome you and look forward to
The independent from Vermont caucusing with the Democrats now has his turn with Scott Bessent live on
Mr.
Bloomberg.
Bessent, thanks very much for being in the office the other day. Mr. Bessent, the United States today has more income and wealth inequality than has ever existed in the history of our country. You got three people on top, Mr. Musk, Mr. Bezos, and Mr. Zuckerberg, who are now worth almost $1 trillion. That is more than half of the bottom of our society, some 170 million people. Three people, more wealth than the bottom, 170 million. We have more concentration of ownership today than we have ever had. We have more concentration of ownership in the media, where a handful of billionaires like Musk, Bezos, Rupert Murdoch increasingly own the media and the information that the American people receive. We have a corrupt campaign finance system in which a small number of billionaires in both political parties make huge contributions into the presidential and congressional campaigns. When you have a small number of multi-billionaires who have enormous economic, media, and political power, would you agree with President Biden, who last night stated, and I quote, "An oligarchy is taking shape in America of extreme wealth, power, and influence that threatens our entire democracy, our basic rights, and freedoms," end of quote. That's what President Biden said last night. I agree with him. Do you?
Senator Sanders, I enjoyed our visit.
You talk a little bit closer into the mic.
I enjoyed our visit, and I hope you got my follow-up materials that on the discussions, my previous writings on the tariffs and China. And look, the three billionaires who you listed, that all made the money themselves. Mr. Musk came to the country as an immigrant.
I understand that, but what I'm asking you is, when you have a handful of people like Musk, who will soon be part of the Trump administration, and others, when you have three people owning more wealth than the bottom half of American society, when these people have enormous influence over the media, when they spend huge amounts of money in both political parties to elect candidates, what Biden said last night is we're moving toward an oligarchy. I'm asking you that question. Do you think, forget how they made their money, do you think that when so few people have so much wealth and so much economic and political power, that is an oligarchic form of society?
Well, I would note that President Biden gave the Presidential Medal of Freedom to two people who I think would qualify for his oligarchs. So
this is not a condemnation of any one individual. I'm just asking you, would so few people have so much wealth and power?
But
do you think that is an oligarchic form of society?
Senator, I think it depends on the ability to move up and down the income.
No, that's not really the answer. I mean, even if you had that mobility, no matter who those individuals might be. All right, but let me ask you another question. Right now in America, we have over 22 million workers who are making less than $15 an hour, and nearly 40 million people in our country earning less than $17 an hour. Shamefully, the federal minimum wage, despite the efforts of myself and other people here, have not been raised since 2009 and remains an unbelievable $7.25 an hour. Will you work with those of us who want to raise the federal minimum wage to a living wage to take millions of Americans out of poverty?
Senator, I believe that the minimum wage is more of a statewide and regional issue.
So you don't think we should change the federal minimum wage of $7.25 an hour?
No, sir.
Okay. Mr. Bessent, millions of working class Americans who are struggling to keep their heads above water are paying outrageously high interest rates on their credit cards. Over half the American people who take out new credit cards are being charged interest rates of over 24%. During his campaign, President-elect Trump promised that he was going to cap credit card interest rates at 10%. I happen to think that is a very good idea, and I will soon be introducing legislation to do just that. Will you, as if you are confirmed, be supportive of what President-elect Trump said and what I want to see happen, and that is to cap credit card interest rates at 10%?
Senator, I think we can both agree that many credit card companies have been bad actors throughout history, and I will get back to you once.
Now, very simple question. Trump said he wants to cap credit card interest rates at 10%. I agree with him. Will you be supportive of what Trump and I would like to do?
When President Trump takes office, and if I am confirmed, I will follow what President Trump wants to do.
Okay. Thank you very much, Mr. Chairman.
Thank you very much. Next is Senator Smith.
Thank you very much, Mr. Chair and Ranking Member. And
this is Senator Tina Smith, the Democrat from Minnesota, now up with Scott Besant. Live coverage of the Senate Finance Committee confirmation hearing on Bloomberg.
I want to follow up a bit on the conversation that we had yesterday and just get into a little bit more detail and actually some of the issues that Senator Sanders is raising. I'm focused on how we can lower costs for Americans and how we can make this economy work better for regular people in this country. And when we spoke yesterday, we talked generally about this. And you have said that you think our biggest challenge is to get after the deficit. And you've also said that your first priority is to extend the Republican Trump tax cuts, which would add $4.6 trillion to the federal deficit. And you've also said that the Trump Republican tax cuts have generated economic growth and that those benefits are going to have trickled down to everyone else. But what I see is that these Republican tax cuts have delivered massive consolidation of wealth at the top. Almost half of those benefits went to the top 5%. The top 1% got a tax cut that was 852 times bigger than the one that was received by the lowest earning working families in this country. And now these wealthy people have more money than they know what to do with. You see Elon Musk buying Twitter, and now he's got an office in the old executive office building and a seat on the platform when the president is inaugurated. And these tech billionaires are launching rockets into space and building themselves these lavish doomsday bunkers, buying up newspapers, all of which gives them more power. So what I want to ask you is, it seems to me that this concentration of wealth is not good for our country, and it is certainly not doing anything to lower prices for working families in Minnesota or help them afford a home or childcare. In fact, it seems like it's doing the opposite of that. So could you comment on this?
Yes, and Senator Smith, I believe that President Trump, and if confirmed myself, are committed to addressing this affordability crisis. And part of the affordability crisis stems from this great inflation that we've had since 2020. It was nascent in 2021. It occurred in 22, 23. We are still substantially above target. My hope is that we will not see it accelerating again. And inflation is one of the great killers for working families. As we talked about in your office, the CPI or PCE, the statistical numbers may be up about 22% under the previous administration, but the basket of goods and services for working families. So getting inflation down, getting interest rates down, and addressing this affordability crisis.
And and as you know, inflation is coming down. And one of the things that I think we saw during the course of the last couple of years was these big consolidated corporations with so much market power jacking up their prices way beyond the amount of money that they would have had to have raised their prices in order to cover their costs. So in my view, this level of corporate consolidation is actually hurting Americans. It is hurting the price. It's costing people more. And that, in fact, the Republican Trump tax bill that there's such a move to reinstate or to extend is going to contribute to that problem, not make it better. But let me ask you another question. You've also said that in order to get our fiscal house in order, we need to cut spending, we need to deregulate, and we need to privatize. So I want to just look at what we are seeing with some privatizing in the private sector that is of great concern to me. Let's look at healthcare. We've seen a move by big corporate investors into healthcare and especially hospitals. Terrible stories we've heard about rural hospitals and clinics getting shuttered, maternity wards getting shut down. And caused in part by this private equity big corporation purchasing and moving in and controlling, again, concentration in healthcare. And none of this, of course, has lowered costs for Americans. In fact, the opposite, people's costs have spiked. So I wonder, do you see this kind of model of big corporate takeovers of healthcare actually helping to lower costs for Americans?
Senator Smith, healthcare, I've probably had help trying to understand healthcare cost and the drivers of that on my to-do list for 10 years to be able to sit in a room for a week and understand this, and I've never been able to do it. But I will tell you that when we see things like healthcare, like higher education, both of which have substantially outperformed any inflation index by cost, there is a problem there. I think that what you are identifying could be one of the problems, but I think the overall level of healthcare costs that we're seeing is driven by a multi-factor.
It is a complicated issue, and I know I'm out of time, Mr. Chair, but what I see, and we've done work on this in Chair Sanders, when Chair Sanders was chair of the Health Committee, these big corporations come in, the quality of care goes down, patient costs go up. There's a hospital in Massachusetts that was bought up by one of these big firms, and they stopped stocking a common treatment for hemorrhage during pregnancy, and they've seen patients die. So again, I think this is an example of how privatizing is not a solution to our problems in healthcare or other parts of our economy. Thank you, Mr. Chair.
Thank you. Senator Johnson.
Thank you, Mr. Chairman. Mr. Besant, welcome. Thank you for your willingness to serve. I want to just start by refuting
Republican Senator Ron Johnson now getting into it with Scott Besant. He'll get 5 minutes time as part of the Senate Finance Committee. This is live on Bloomberg.
It's just not true. So I'm going to actually use the facts from CBO. Again, this isn't to confirm CBO numbers. This actually shows you why we ought to take CBO projections with a grain of salt. After its passage, CBO projected 10 years, but I mean for 7 years that we just experienced, total revenue of $27 trillion. Actual revenue was $28.7 trillion. That's, to do the math, that's $1.7 trillion more than what CBO estimated, which shows that the original score was $1.5 trillion lost revenue. So we not only paid for the tax cut, in 7 years, we generated $200 billion more revenue, even with the COVID recession. So again, we need to take CBO scores with a real grain of salt. But I hope this committee understands what Senator Graham was talking about in terms of your humble beginnings and your tremendous American success story. And so I want to ask you a hypothetical, because you understand American families. If an American family, let's say they normally spend $100,000, have a serious health crisis, and so in 1 year they have to spend $50,000 on medical bills, but then fortunately that family member gets well, what would that family spend the next year? Just real quick.
Unless they have more income, they'd spend
probably $100,000.
They'd spend the same 100 and probably have debt costs associated with that.
Right. They certainly wouldn't do what the federal government has done. In 2019, before the pandemic, we spent $4.4 trillion. In 2020, we spent $6.6 trillion. When the pandemic ended, we didn't really reduce spending. For the last 5 years, we've averaged $6.5 trillion. Last year, spending $6.9 trillion. Mr. Besant, is there any justification for keeping spending levels at this level?
Senator Johnson, as I've said repeatedly, the United States does not have a revenue problem. We have a spending problem. So the question is, how do we reset spending levels to a reasonable pre-pandemic level? I wrote a column in the Wall Street Journal. I laid out a couple scenarios, and let me just give you the guts of it. If you take one of the pre-pandemic years and increase all the spending by population and inflation, by the way, that's what families would do as well. But you exempt Social Security, Medicare, and interest, and use President Biden's 2025 budget, because you spend what we plan on spending this year. If you take Bill Clinton's 1998 spending, I don't think he spent too little back in 1998, we would be having a baseline of $5.5 trillion.
If you took President Obama's 2014 spending levels, it'd be $6.2 trillion. The one I like the best, though, is if we use President Trump's 2021 budget, his estimates for spending in 2025, and use, again, just use those numbers, but slot in Social Security, Medicare, and interest as they are. Nobody's touching those. We'd be spending about $6 trillion. So wouldn't that be a reasonable level? Somewhere between $5.5 and $6 trillion is a baseline spending to project our next 10 years.
Senator, I look forward to working with you on this, that you've clearly done more work than I have. And this looks like a very good starting point to me to figure out how we've gotten into this spending morass.
So it sounds like pretty reasonable approach to me. By the way, I'd take 1998, I'd use Clinton's spending levels for this. I also want to refute this current CBO score on extending the TCGA. Back then, they scored the whole thing as $1.5 trillion. If you just inflate that the same way according to CPI, it'd be $2 trillion. How do they justify a score of $4.3 to $4.6 trillion? It makes no sense. So again, I think we need to take those estimates with a huge grain of salt. My final point, I heard the ranking member talk about inflation, the cost of living. Because we've incurred these massive deficits, a 1998 dollar today is only worth 51 cents. A 2014 dollar today is only worth 74 cents. A 2019 dollar is only worth 80 cents. That was caused by this massive deficit spending, the devaluation of the dollar, and a lot of devaluations occurred over the last 4 years because we spent too much money. Not because we didn't tax America enough, it's because we spent way too much money. Thank you, Mr. Chairman.
Thank you. Senator Cantwell.
Thank you so much, Mr. Chairman. Mr. Bissett, congratulations on your nomination, and I see your family sitting there in earnest.
We now have Democrat Maria Cantwell from Washington as we make our way through
so
lawmakers on the Senate Finance Committee, talking with Scott Bessent.
Perspectives you can see from this committee are arguing about what we think are the right economic policies for the country, and as the Treasury nominee, with your background and experience, we still are talking about the president's policies and whether we think they're effective or not. Real GDP has increased at an annual rate of 3.1% in the third quarter of 2024. That's strong growth, right?
As an aggregate number, it's strong growth.
Okay. The economy added 16 million jobs over the last 4 years. An average unemployment rate is the lowest it's been in 50 years. So that's led to better pay and working conditions. We want that, right?
I'm in favor of better pay and working conditions.
Okay.
Yes, Senator.
And after-tax income increased by 400%. So these are good economic news. And I personally think that focusing on innovation and building supply chains is a good thing to do. And so when you start talking about tariffs, that's when you get, the Pacific Northwest attention. In fact, I would say a recent editorial by one of my newspapers was, bracing for the Trump tariffs, aviation in general. You can imagine we actually have an actual net surplus. I think we export about $2 billion worth of goods out of our state versus importing $1 billion, but this is a big part of it. And so in the aviation sector, I think I sent you an article about the fact that we think increasing our manufacturing innovation to continue to have markets and sell to those markets is a good economic strategy.
Senator Cantwell, as I discussed in your office, that in my hometown of Charleston, South Carolina, Boeing is also the largest employer. So I view aviation as very important.
Great. So now I want to, and believe me, I would have the same conversation with Joe Biden or Barack Obama or whoever. So I want to focus on innovation, not the tariffs. I'm worried that the tariffs are going to increase supply chain products. They're going to increase prices on our farmers. They're going to increase prices on Americans. And so I want to ask you, don't you think we are in an environment where exporting products and growing markets outside the United States is a big economic opportunity? And what are you going to do to build coalitions to help us be able to achieve opening up those markets, as opposed to just the retaliatory tariff environment, which may raise costs on Americans and not resolve these issues?
So Senator Cantwell, thank you for that. And after our discussion in your office, I actually went back and looked at some older data. In 2000, in terms of the labor share of aggregate income in the U.S., 69% accrued to labor. Today, that number is 60, and you could see a sharp drop after what is called the China shock. So I agree with you that opening markets is good, but the free trade must be also balanced against fair trade. And clearly what has happened is the trade has not been fair. That has fallen on the American workers, and we cannot allow, as I think I mentioned to you, China is the most imbalanced, unbalanced economy in the history of the world. They are in a severe recession/depression. They may have -4% disinflation, and they are attempting to export their way out of that, as opposed to doing the much needed internal rebalance.
Yeah.
So, I am with you on the need to open markets, but we cannot allow a player like this to flood our markets or to flood the world.
Well, but I'm saying I believe in coalitions. We just discussed a technology NATO. I think you thought that was a good idea. The notion, though, I mean, I can get upset with my colleagues on the other aisle all the time and object, but that doesn't move me forward. And so I hope that you will look at what we're going to do to build allies. I mean, these numbers that basically are talking about just the tariff and what it would do to the price of gasoline, given Canada, is concerning. And so I want to know that the Trump administration is going to focus as much on innovating our way to success as we are on the tariffs, because I do think we're going to see retaliatory tariffs. We saw them in our state. It hurt us in our agriculture. And what happened is that you lose more farms. I mean, there's a lot of people buying farmland. Goldman Sachs, Bill Gates, there's a lot of people buying farmland. But we're losing farmers in the middle of the trade wars, and that's a concern I have. Thank you, Mr. Chairman. And oh, by the way, thank you so much for mentioning housing. I so appreciate that was in your statement. I look forward to working with you. I do think that's an area, if the president will push forward, that it is a way for us to lower costs. Thank you.
Thank you. Senator Lujan.
Thank you, Mr. Chairman. Good to be with you. Mr. President, thank you and your family for being with us today.
Senator Ben
very
Lujan
much
now,
appreciate the
Democrat
conversation
from New
we had in the
Mexico.
office. Now,
As
I'm gonna
Senators
touch
question
on
Scott
several
Bassett live
topics,
on
so
Bloomberg.
I'm going to ask you some yes or no questions, and I thank you in advance for your brevity. It may surprise many observing today the immense responsibility that the Secretary of Treasury has in stemming the flow of fentanyl and other substances. Now, yes or no, will you commit to continuing the Biden administration's counter-fentanyl strike force, which brought together the Office of Terrorism and Financial Intelligence and IRS criminal investigation to fight financial crime?
Thank you, Senator. I enjoyed our visit. And as I mentioned in your office, this is personal for me, as two families who are close to our family lost children to the fentanyl crisis. So I will commit and know that it is my belief that President Trump is laser focused on this issue.
Mr. Bennett, yes or no, will you work with me to ensure that there's more transparency over suspicious activity reports, SARS, at the Financial Crimes Network for Congress?
I believe, as you and I discussed, there is a sleeve of Treasury called TFI, Terrorism Finance. that deals with this within FinCEN, and I believe that I believe that we have to have a 2025 approach to, as you and I talked about, digital currencies and all branches of government. So, yes.
Now, Mr. Bissett, in your role as Treasury Secretary, do you agree that you will play an important role in advising President Trump and congressional Republicans on policy related to the economy, including investment in government programs?
Yes, Senator.
Now, I was pleased in our meeting that you stated, quote, "No cuts will be needed," unquote, to achieve your economic goals. I think that might surprise a lot of my Republican colleagues, but I very much appreciate that conversation that we had. Now, yes or no, will you recommend cutting Medicaid?
I'm sorry. Did you say, I didn't hear whether you said Medicaid or Medicare.
Yes or no, will you recommend cutting Medicaid?
Medicaid, that I will, it's the business of Congress to do the budget, and I am in favor of empowering states, and I believe that for some states that will be an increase, for some states that will be a decrease.
So, Mr. Bissett, will you recommend cutting Medicaid to President Trump? And I'll remind you that you acknowledge that one of your responsibilities as Secretary of the Treasury will be to be providing this advice.
I will get back to you on this when I have seen the details of the full budget proposal once President Trump is in office and if confirmed.
Will you recommend cuts to broadband following the investments that we've been seeing across the country, making immense progress in connecting more people across the country that were included in the bipartisan infrastructure law?
Senator, I am unfamiliar with the exact program. It is my understanding that much of the allocated funding has not been dispersed yet. So I will get back to you on that.
Well, Mr. Bissett, a lot of folks back in South Carolina, including some of your farming neighbors, are getting connectivity because of these programs. You may just need to chat with them about the importance of what this program means. As my time expires, it might surprise many here that there's only a couple of us in this body that are members of Head Start, and I imagine we might hear a little bit more of that from my brother in Head Start, Mr. Warnock here. But when we talk about the importance to early education in America, the economic benefit, yes or no, will you recommend cuts to Head Start?
Yeah. Again, Senator, I'll have to get back to you on this. I don't understand the intricacies of that program.
Of Head Start?
Yes, I don't understand the budget ramifications. I don't understand.
Do you know what Head Start is?
Yep, I believe it's an earlier childhood education program.
That's fair, sir. I didn't realize that you had to qualify to get into that program. So the family that I was raised in, we qualified to get into that program. But it opens up doors. I mean, heck, it got a couple of us to the United States Senate. So certainly hope that we might be able to find some agreement in protecting that program. And if someone tries to eliminate that in early childhood education, that we could count on you on behalf of New Mexicans, South Carolinians, and people across America to say, no, we're not going to do that one. Mr. Chairman, thank you for the time today. Appreciate you being here again, sir.
Thank you, Senator Barrasso.
Thanks so much, Mr. Chairman. Thanks so much for your willingness to serve. Thanks for being here. Enjoyed our discussion quite a bit and talking about the future for the country and the role of the Treasury Secretary in getting our economy back on track. This means lower prices, higher wages, more jobs, and stronger economic growth for America.
Senator John Barrasso,
It also
up
means
at bat now, the
protecting
Republican
people
from
in states like
Wyoming,
from
questioning
crushing
Scott Besson after some
regulations and
opening remarks.
devastating tax hikes. It means getting wasteful spending under control. And I'm greatly encouraged by our meeting that we had. You have, I believe, a strong vision for America, a strong vision for unleashing American energy, for getting tough on China, for getting tough on our adversaries, and to getting the federal government out of the way for so many of us. I'd like to talk a bit about energy, and I've just been in the other committee yesterday, Secretary of Energy, earlier today, the Secretary of Interior, lots of energy questions. So I'm glad that we agree a key ingredient in reigniting the economy in this country is to unleash American energy. In my home state of Wyoming, and we're an energy superpower as a nation, and we are America's energy breadbasket in Wyoming. Energy production is the heart of our Wyoming economy and the nation's economy. It supports workers as well as schools, infrastructure, the money that comes from that, the tax revenue. Wyoming is the least populated state, but it is the third largest net energy supplier, producing 12 times more energy than we consume. It's at the forefront of oil, natural gas, coal production, carbon capture technology, hydrogen production, many alternative sources of energy. What's happened is that energy producers in Wyoming and across the country faced a whole of government assault from the Biden administration on American energy production. Taxes, crippling regulations, they've weaponized the tax code in ways that are just unthinkable to me against conventional American energy production. The things that Joe Biden signed into law just made things worse, but the good news is with you there, with President Trump in the White House, things are about to change. So you've talked extensively about boosting American energy production. What role do you see yourself playing as Treasury Secretary in making sure we become American energy dominant and in terms of energy security as well?
Senator Barrasso, I very much enjoyed our meeting and wide-ranging discussion, and my family and I had a fantastic vacation in Wyoming this summer. That in terms of within the potential Trump administration, I'm sure you've heard it from Secretary-designate Wright and Burgum, we refer to as energy dominance. And energy dominance, one of the reasons that I believe we have not been able to apply as muscular sanctions against the Russian Federation, or unwilling, was because the supply of energy was constrained in the U.S. So the same with the terrorist regime in Iran. So I would view that as we can raise U.S. production, we would squeeze down the bad actors, especially Iran. I think I'm right, maybe not in the exact numbers, but in order of magnitude. I believe Iran was down to 100,000 barrels of oil exports when President Trump left office. I believe that they are now exporting in excess, or approximately 1.7 million. So through sanctions policy, I believe that we can, again, as I like to say, make Iran poor again. Not the Iranian people, the government, and then at the same time, they have our domestic producers push that up with the highest energy standards in the world.
Yeah, we're the best, we do it, we're the best stewards of the land, and I agree. And what we've also seen, as you mentioned, with Iran increasing the sales, they're selling it to China. China is buying it at a discount, so they're getting cheap energy. Iran is getting tanker loads of cash back, essentially, and they're using that money for terrorism. So in terms of our own national security. I have one last question in my time remaining, and this has to do with the Tax Cuts and Jobs Act that we passed in 2017. If that were to expire, we're talking about a massive tax hike of over $4 trillion. What would that kind of a tax hike mean for small businesses, for job creators, as well as our global competitiveness, if all of a sudden we put the heavy wet blanket of a $4 trillion tax increase on our nation?
Senator, I think it would be devastating. That is, especially for small businesses. One of the things that, as someone who came from a very small town, lived in New York with a very big town, and came back to a small town, I believe Wall Street has done great the past few years, and that Main Street has suffered. I think it's Main Street's time. Wall Street can continue to do well, maybe not as well, and it's time to have a Main Street small business-led recovery led by small banks, regional banks, as I call it, reprivatizing the economy. And as I said earlier, we've seen since November 15th, since President Trump's election, we have seen the biggest jump in the history of the Small Business Confidence Index.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Tillis.
Thank you, Mr. Chair. Mr. President, thank you for being here and time in the office. And
Senator Tom
congratulations
Tillis, now the
to you,
Republican
your
from
spouse,
North
Don,
Carolina,
and
speaking
children,
with
I
Scott
think
Bassett
Cole and
live on
Caroline.
Bloomberg.
He's doing a great job. I leaned over to Senator Johnson, and when you were being attacked on by one of my colleagues on the other side of the aisle, it says the guy looks like he's got a heart rate of 40. You're very composed, and thank you for staying on the facts and demonstrating all the knowledge you possess. When I wasn't here, someone put into question your viability as a nominee because of a lack of public service, which I find interesting. Sometimes I think we have too much public service in people's background here, not real-world business experience. But can you give me an idea of why this nomination may represent your first entry into public service?
Yes, Senator Tillis. And again, as an adjacent state and someone who's a homeowner in North Carolina, I appreciated our conversation in your office. Look, I have been in public service, just not in the government. When I lived in New York, I was a strong supporter of a charter school called Harlem Children's Zone, which takes the young residents in a multi-block, gigantic block, keeps getting bigger area of Harlem, and takes them from cradle through high school. But I have found that my service, anyone can write a check, or anyone that with my means can write a check. What has been fulfilling for me is mentoring many of these young people. I'm still in touch with them today. I was also a trustee for Rockefeller University, one of the great research universities in the world. I was on the executive committee and chaired the investment committee. But sitting here today is especially meaningful for me because this is my third try of public service. In 1979, when I was 17 years old, I wanted to fight for my country. My father had just experienced extreme financial difficulties. I wanted to attend the U.S. Naval Academy. I was offered by our congressman in the 6th District of South Carolina an appointment, but was unable to take that appointment because of my sexual preference. I managed to go to Yale, worked several jobs to do that. While at Yale, I wanted to do public service and joined the Foreign Service. I was told also not welcome. So sitting here today is my third attempt at public service. And I sit here knowing that President Trump chose me because he believes I'm the best candidate. Not because of my sexual preference, not because Treasury secretaries with green eyes do better. And I think it is a tribute to President Trump that he looks at people as people.
I agree, and I appreciate that answer. I'm going to go into a lightning round here. First off, this is the Joint Committee on Taxation distributional analysis of what happens to the various socioeconomic strata if we don't manage to pass the jobs and tax cut extension without objection.
Without objection.
Senator Johnson does big phone boards. I do handouts. I'm handing this to all of my Republican colleagues right now saying if we fail to extend the Jobs and Tax Cuts Act, we're going to own a fiscal crisis for people in middle America. 93 million people will be affected in terms of an added tax burden if we fail to pass an extension of TCJA. Now, the last time I checked, there are not 93 million rich people in this country. There are people who struggled like you did when you were a kid and like I did when I was a kid, who had to work themselves through college. And every time we had some well-intentioned program from government to make things better for me, it made it harder for me to dig myself out of the economic situation I was born into. So the facts are stubborn things. This tells us what happens if we fail to pass the jobs and tax cuts. And it doesn't even get to the impact that I had. It turns out at that very table, Jelly Roll was here for a finance committee hearing. He lived in the same trailer park that I did 20 years later, and South Nashville, Tennessee. And what I found interesting in my own family is we were right on the economic edge. Every time government had some well-intentioned program to tax the rich, I went from a house to a trailer park. And every time government let us do what we wanted to do, we lived in a house. I'm a living example, and I'm sure Ben Ray Lujan, some other people have had those experiences. You got to go back and look historically at when people like me and people like you had real opportunities. I look forward to supporting your nomination, and Mr. Chair, I'm going to support some. I'm going to send some questions for the record, but it's just to reinforce the message that Republicans have to deliver. And anyone who says that we should not is advocating for a $5 trillion tax increase that will hurt the people who are on the economic edge worse than anybody else. Thank you, Mr. Chairman.
Thank you. Senator Warnock.
Thank you, Chairman Crapo. I'm grateful and honored to be joining this committee. Look forward
Senator
to
Raphael
working with you
Warnock,
and
the
ranking
Democrat
member
from Georgia,
to ensure
now up for
our
questioning
tax
Scott
code
Besson.
supports
This is
working
live on
families,
Bloomberg.
to protect Social Security, Medicare, Medicaid, and to promote trade policies that work for Georgia businesses and that boost our economy. Mr. Besant, good morning and good to see you again. I enjoyed our conversation earlier this week, and in that conversation, you outlined ambitious goals for the federal government and deficit reduction. I'd like to follow up on our discussion about your economic plan. According to a new report from the Tax Policy Center, the largest tax cuts from extending the Trump tax bill would go to those with the highest income, especially those in the top 1%, making more than $1 million per year. In fact, the top 1% of owners will take home roughly 1/4 of the benefits of the law, and the top 5% will get almost half of that. Do you believe that the wealthiest 1% of Americans deserve or need an additional tax cut?
Senator Warnock, I greatly enjoyed visiting with you. I think probably a better way to look at it is on a percentage basis. And when I think about the distributional aspects of the Tax Cuts and Job Act, that most of the benefits accrued for the working and middle people as opposed to the upper ends. In absolute dollars, as you just read, that is correct, but I think it's important to look at it in percentage terms.
So you believe that the tax cut that provided 1/4 of the benefits of the law to the top 1% and top 5% getting almost 1/2 actually benefited those at the bottom more than it did those at the top. Is that your testimony?
I believe that in 2018, 2019, that the households in the bottom 50% of income earners, the wealth increase for those households was three times higher than the wealth increase for the top 10% of Americans.
So we should continue to move in that direction and give more tax cuts to those at the highest. You have talked about high deficits as a national defense problem, and I agree with that. I think we need to be fiscally responsible. We need to work to close the deficit and bring the national debt under control. In 2013, Congress extended the Bush tax cuts for everyone except those making more than $400,000 a year. This bipartisan decision saved the Treasury $600 billion, helping to narrow the deficit. Do you agree that ending the tax cuts for those making more than $400,000 would help close the deficit and reduce our national debt?
Senator Warnock, I do not. I believe that you would capture an inordinate amount of small business people who largely are in that cohort of 400,000 to $1 million.
So you wouldn't cut it off at 400,000. What about $1 million?
That again, I believe these are small business pass-through owners, and I believe that we, as I said before, Wall Street's done great. It is time for Main Street to do well, and small businesses need to drive what I call the reprivatization here away from this government spending.
I agree that it's Main Street's time. I'm from Atlanta, so I'll say Peachtree and some other locations in my state. What about those making more than 10 million? Would we reduce the deficit by extending those tax cuts for folks making about $10 million?
So again, I think it's important that we put in incentives for them to invest. So going back to the 100% depreciation for equipment, that I think that.
So I don't mean to keep interrupting, but I'm the pastor, and we're known to be loquacious of speech, but I'm running out of time here. What about $1 billion?
So again, that I think that these are the job creators.
So there's no income level for which you would support raising taxes. Is that fair?
There is no income level that I don't think we should continue the TCJA as it was.
All right. I think our country is facing structural deficits. However, I think that to continue to reduce taxes for the wealthy and letting them avoid taxes based on what they already owe is not going to get us out of that problem. But I look forward to continuing that discussion with you. Thank you very much.
Thank you, Senator.
Thank you very much. And before we go on to Senator Blackburn, I just want to restate there's a lot of facts that have been thrown around in this hearing today. I'll just restate one that I said in my opening statement, and that is of this $4.3 to $4.6 trillion tax increase that it could happen. This is actual dollars. 2.6 trillion of that goes to families and individuals who make less than $400,000. That is simply the distribution of this tax increase. Senator Blackburn.
Thank you, Mr. Chairman. Thank you.
That was Chairman
for
Crapo. Now, this is Senator Marshall Blackburn, the Republican from Tennessee.
If we do not extend the Tax Cut and Jobs Act, it is that $4 trillion tax hike that people are going to see. And I appreciate your comment about a Main Street small business recovery. That is something that is so vitally important. And as the chairman knows, we have had much discussion over the last few years with the Biden administration over how they determine that $400,000 number. If it is the gross, if it's the adjusted gross, they came up with the term of total positive income, which is everything you make. And we know that the Biden administration approach on this would be a killer for Main Street businesses. We know that 199A is vital to them, and they need to see that in the Trump tax cuts and in that permanent so that we can have that Main Street small business recovery and revival. I appreciate that, and I appreciate that President Trump has nominated you for Treasury Secretary because you are sensitive to that and what your work means to Main Street and to individuals and getting the IRS under control and looking at some of these provisions that are going to be in front of you. So we appreciate that you would come back a third time and look at public service, and that John and Caroline and Colin, by the way, they are behaving so beautifully. Whatever they want, they get.
Ice cream.
Senate orders. We'll be right there to support them. I do want to talk with you for a moment about CBDCs and some of the push that the Biden administration had. They did an executive order for Treasury to research development of a CBDC in the United States. And of course, this causes a lot of us heartburn because we look at what the CCP did with the digital yuan in connection with the Olympics. So upon confirmation, how would you approach this discussion of CBDCs And are you for them or against them? Could you end the Biden administration project to create a U.S.-based CBDC?
Senator Blackburn, thank you for your remarks. I may have a little trouble disciplining the two behind me, as I'm sure that I will hear that a U.S. Senator has vouched for their behavior. But on CBDCs, I see no reason for the U.S. to have a central bank digital currency. In my mind, a central bank digital currency is for countries who have no other investment alternatives. So if we think about a reserve manager, a high surplus country, whether it's Saudi Arabia, Singapore, who ends up with, call the Chinese currency whatever you want, the yuan, the RMB.
Yeah.
If you own that currency, you have to have something to invest in. That there's very little to invest in if you want to hold the currency. You could own Chinese government bonds, which don't yield
So
very
your
much.
view of that would be a negative view?
Well, I view that many of these countries are doing it out of necessity, whereas the U.S., if you hold U.S. dollars, you could hold a variety of very secure U.S. assets.
I appreciate that. I appreciate your comments earlier to Senator Barrasso about the Pillar 2 negotiations. This is something that we would be well served to extract ourselves from this. Currently, the preliminary data that we have, 40%, right at 40% of the total Pillar 2 tax burden is on us. And China, of course, has found a way to exempt themselves from this. So that is in need of a revisit, and I look forward to you doing that and standing with our companies. I want to get, and this I think you can just submit to me in writing, Advanced Persistent Threat, APT, which is China. They were able to override Treasury's security system and remotely access workstations where they reported access to unclassified documents. And of course, this is Chinese Communist Party at work again. And this is, we found this out after finding out from the Treasury Inspector General that 2,800 IRS employees still had TikTok on their government devices. If confirmed, and when confirmed, will you take steps to improve Treasury's security systems?
Senator Blackburn, one of the earlier questions was, what policies of the current Treasury Secretary do you disagree with? And as you noted, the December 8th hack into Treasury was via a work-from-home system. Yeah. So I, as Treasury Secretary, have confirmed, plan to be in the office every day that I'm in Washington, D.C., and I expect all the other employees to do that too.
Thank you.
And I think it's a matter of national security for everyone to be at 1500 Pennsylvania Avenue.
Thank you. That is well received. Thank you, Mr. Chairman.
Senator Welch.
Thank you. Thank you very much, Mr. Chairman. It's delightful to be.
We now move to Peter Welch, Democratic Senator from Vermont, questioning Scott Bessent in his confirmation here. This is live on Bloomberg.
Welcome to your family. As we discussed, the situation for a lot of Vermonters who work incredibly hard is very tough. Vermont actually has one of the widest, if not the widest, gap between what people can earn and what their expenses are. So it's tough at the end of the month to pay all the bills, the grocery bills, the healthcare bills, all of these things. And we're talking, in a way, abstractly about this tax plan. And the reality for most folks in this country is that for the past 40 years, working Americans have actually had a pay cut, not a pay increase. And my hope is that whatever tax policy we have is going to start with a commitment to making lives better for the Main Street folks that you mentioned, and I'm glad that you did. But there is going to be a lot of negotiation on how to pay for these tax cuts. And one of the things that will be on the block is something that's very, very important to Vermonters, and that's the affordable tax care credits that we have now. So in Vermont, I mean, healthcare is incredibly expensive for everybody. But if we have, just as an example, an electrician in Bennington, Vermont, who's making $67,000 a year, with the tax credits that are set to expire, that family would have a $700 a month increase in their health care bill. That's going to hammer them. It's like $9,000. So my question to you is, in putting together this tax proposal, where you are going to have to be making recommendations about how to pay for it, will we continue to provide this help to Vermonters, like this electrician in Brattleboro, so that he doesn't get hammered on healthcare premiums going well beyond what he can afford?
Senator, as we discussed in your office, and I haven't had time to do my homework on this, as I think I told you that my family, friends, business colleagues, I often get sick of hearing my phrase, no data, no opinion.
No,
I will get up to speed. If confirmed, I will get up to this.
I appreciate that, but there's a couple of things that really make a difference for working Americans in South Carolina and in Vermont. The child tax credit, you know, when we had that, it reduced poverty for children by 50%. That's really elemental for hardworking families. In the premium support, where healthcare is just a brutal expense for employers too, by the way. So my hope is that in the design, we're going to start by making certain that we do no harm to working Vermonters and working South Carolinians, okay? Second, on the tariffs, I'm in support of the China tariffs. That is defending us against unfair trade practices by China. I'm concerned about the impact of tariffs on Canada and what that does to us in Vermont. Our major business partner, export partner, is Canada. And from what we have seen, it would raise the cost to businesses, probably cost jobs and cost to consumers. So what reassurance can we get from the Trump administration that there's going to be a do no harm policy to American consumers and Vermont workers and small businesses with a tariff policy?
Senator, very, very difficult for me to isolate Vermont, especially. But in terms of working Americans, I believe that President Trump understands that it's working America. He had a very unique coalition.
Well, he does. And my hope the policy will reflect that. So I appreciate the opportunity to work with you on that.
I look forward to working with you. And look, I think he understands that it's the affordability crisis.
It is. And just the last thing, very little time, but we were talking about credit card rates for consumers. Credit card fees for our small businesses are the highest in the whole world, the highest in the whole world. Why can't we bring them down and pay what Europe pays? Our small businesses, it's like the second or third highest expense for them. And you'll have some impact there, but those costs on our small business, including those small, the pass-through businesses, I'd like to get them down and get your help in doing that.
I look forward to working with you on this issue, if confirmed.
Thank you very much.
Thank you.
Thank you. Senator Marshall.
Well, thank you, Chairman Crapo, Ranking Member Wyden. It's great to join the Finance Committee. As I listen
Senator Roger
around,
Marshall
it seems like
of
to me like
Kansas,
so many of us
now the
share same
Republican
goal,
up next
that we want
on the Senate
Americans
Finance
to be
Committee, speaking with
prosperous.
Scott Bessent.
We want
This is
them to be
live
able to
from
live their
Washington.
American dream. We disagree how to get there oftentimes, but we all had this same goal, that we want Americans to be prosperous. Mr. Bessent, welcome, and congratulations on your nomination as well. I think it could be said that rural America, in many ways, is President Trump's base. Of the 77 million people that voted for President Trump, a lot of them came from rural America. In fact, I think I could argue that 90% of rural Americans voted for President Trump. And no one has suffered more these last 4 years than rural America has. So my questions may be geared up about that is this economy. What can we do to help Main Street, to help small businesses, and to help rural America? Now, everyone knows that you're a financial wizard, that you've been successful on Wall Street. But I just want to understand your commitment to small town America. You're from a small town. I think you understand agriculture from our conversations and even some background in community banks. How important are community banks to those small towns, and what is your commitment to rural America?
Well, Senator Marshall, I think I, again, may be one of the few Treasury Secretary nominees in recent period who occasionally listens to farm radio on XM on weekends. And I can tell you that after the Silicon Valley debacle, that farm radio was intensely focused on the potential loss of small and community banks.
Yes.
And they are important pillars for those communities. So I think examining in terms of what is the regulation, what is the supervision, that are they being unduly burdened, and that they are not able to help their communities. What are the supervisor? What is the supervisory edict there? And then again, as I said earlier too, I think that China has not made good on their ag purchases for 4 years, and if confirmed, next week I would start pushing for them to resume the purchases, and then I would conference with President Trump on whether he believes that there should be a makeup provision.
Thank you. I want to stay on rural America and talk about tax credits for a second. 45Z is a tax credit, and I'm not sure if you're familiar with it or not, but it would really help rural America in the standpoint that we help take some of our feedstocks, whether it's soybeans or corn, and turn it into biodiesel, renewable diesel. I think it's going to lead to a cleaner air for all of us, but it's certainly very important to rural America, and just would ask that you would look into it. But what we can't do is let China benefit from it. I really think any tax credit we have should not impact foreign entities. And just want to get a few background thoughts on this 45Z tax credit from you.
Well, as we discussed in your office, and you gave me a very good overview of how the Chinese backdoor into this program. So that's obviously unacceptable. And I look forward to working with you on the 45Z.
Great. And then I want to finish up probably here on the Trump tax cuts and how important it is to make them permanent. I don't understand what $4.6 trillion is, but I can tell you that families back in Kansas were able to keep about $1,000 a month in their pocket after the Trump tax cuts took effect. And I think that would be going forward. So if we lost these Trump tax cuts, then I would assume that those same families would be giving the federal government another $1,000. So this issue to me is vitally important to rural America to the tune of $1,000 a month. So I guess my question for you is, beyond just making the current Trump tax cuts permanent, what else would be on the menu that would help the economy as far as other tax cuts?
Well, I think President Trump has talked about, and it's not specifically a rural issue, but it is something that affects the lower 2 quintiles of the income distribution more. No tax on tips, no tax on Social Security, no tax on overtime, and perhaps making auto loans tax deductible again. That would go a long way towards addressing this affordability crisis.
So it's a great start. I hope we can come back and talk about C-Corp tax coming down as well one more time. That is permanent as it is, but I think there's opportunity there. Thank you, Chairman. It's an honor to be here.
Mr. Chairman, one sentence. I very much appreciate our colleague mentioning 45Z, the Clean Fuels Production Tax Credit. That is part of the clean energy tax credits that we got into law. So I look forward to working with you on it.
Thank you. So let me just, Mr. Bessent, so you understand how we're going here. I know it's been a long time, and thank you for your patience. We have Senator Warren next, followed by Senator Scott, and then Senator Whitehouse. And then Senator Wyden would like to ask one more question. He gets the only extra question of the day. And then he and I will probably make a few very brief remarks in wrap up, and we'll be finished at that point. Senator Warren.
Thank you, Mr. Chairman, and welcome, Mr. Besson, and welcome to your family. It's good to see everyone here today. So last month,
Senator Elizabeth
President
Warren now from
Trump
Massachusetts.
said
This is live from Washington on Bloomberg.
repealing the debt limit. So do I. So there we are. Donald Trump and Elizabeth Warren are singing from the same hymnal. Mr. Besson, let's make it a trio. Do you agree with President-elect Trump that the debt limit should be repealed?
Senator Warren, first of all, I enjoyed our visit in your office and appreciate the fact that when I walked in, you said, let's talk about what we have in common, our love of Cape Cod, the Red Sox, and that addressing the affordability crisis and the housing shortage. So the debt limit is a very nuanced convention. What I would like to do is get back to you and President Trump. I'd like to do a survey of market participants with this amount of debt. It's very fragile equilibrium that we sell bonds in.
Mr. Besson, forgive me for just a minute here, because this is the question about I'm not asking you whether or not we ought to increase our debt. I'm asking a very different question, and that is whether or not we should have a statute in place that says there's a debt limit that, if we don't increase the debt limit, would cause us to default. And that's not an economic analysis. In fact, let me ask you, I understand earlier you were citing the Congressional Budget Office. Have you seen the Congressional Budget Office projections of what would happen if the United States government defaulted on its debt? That is, if we hit the debt limit and just kept on going without raising it or eliminating it?
Yeah, look, Senator Warren, the United States is not going to default on its debt if I'm confirmed. But I will tell you that for people who don't understand the debt limit, it might be like taking out your handbrake in your car, that you can still hit the brakes, but it's one less feature.
But I thought you just said you'd never use it. So you're talking about a handbrake that appears to be there, but in fact is not connected to a braking system. It is literally never used, right?
I've never pulled a handbrake going 60 miles an hour in my car.
And the reason for that, I assume, is the enormous cost of a debt default. In fact, the Congressional Budget Office that I was asking you about a minute ago said that, or Moody's estimated, that a debt limit breach would cost the U.S. economy $12 trillion and cost 6 million people their jobs. I think this is the reason that President-elect Trump said that eliminating the debt limit is, quote, the smartest thing Congress could do. And I'd like for Congress to do the smartest thing, and that is eliminate the debt limit so we don't have this problem.
Well, Senator Warren, I will tell you that once President Trump takes office, and if I'm confirmed, if he wants to eliminate the debt limit, I will work with him and you on that.
Great, because I agree with President-elect Trump that the debt limit should be repealed. I note, however, right now that's not what congressional Republicans plan to do. Last month, they committed to raising the debt limit by another $1.5 trillion. So why do Republicans want to raise the debt ceiling? Because their plan is to shovel new tax cuts to billionaires, and that would increase the debt by more than $1 trillion just in the next 4-year period. During his first term, President Trump's only major legislative achievement was his 2017 tax cuts that mostly got sucked up by millionaires, billionaires, and giant corporations. Now, most of these cuts were good for only 8 years, so that Republicans who were designing them could claim that the cost was only $2 trillion. 8 years of cuts that added $2 trillion to the debt. Now we're talking about Republicans and President-elect Trump who want to give those same rich people and giant corporations more years of tax cuts. And I just want to be clear that we understand each other here, that I think it was Senator Warnock who asked you about, is there any billionaire rich enough who you wouldn't support a tax cut for going forward?
That I think it's unwise to single out any
rich people,
any individual.
Okay, is there any group of billionaires? You can just pick a dollar figure, and there can be more than one above that.
I could give you a glib answer, but I won't. But again, that's not where the money is. At one point when President Obama was debating Mitt Romney, the moderator said, "But sir, that would make collections go down." And he said, "Yeah, but it's about fairness." And I have to tell you, Senator Warren, I'm about collection.
I understand, but I like to think that fairness is about billionaires actually paying their fair share too. Thank you, Mr. Chairman.
Thank you, Senator Scott.
Thank you, Mr. Chairman. Scott, welcome, or Mr. Besson, welcome to our committee. Good to see you again, and thank you for your willingness to serve. It is certainly a sacrifice to you and your family, but I think it's actually an investment.
Senator Tim Scott, South Carolina.
Folks who are willing to sacrifice on behalf of a greater cause. The greater cause in this instance is generations of Americans you will likely never meet, but will be better off because we do the right thing. One of the things I think about as the right thing, I know you grew up in a working class family, and I grew up in a single parent household mired in poverty, is having stability in our financial system. One of the places where we need the greatest amount of stability is for our banks. So think about Silicon Valley Bank and other banks that failed recently. As you can imagine, as the chairman of the banking committee, I care deeply about the stability and strength of our banking system. From your vantage point, can you provide your assessment of the current safety and soundness of the U.S. banking industry and what steps you believe are necessary to ensure long-term stability?
Senator Scott, good to see you. Good to have two South Carolinians in the room. And look, I think the strength of the U.S. Economy, our financial markets, is the depth and breadth of our financial systems. I believe that we have likely seen the top 5 banks become too big a share of banking assets. We have seen, because of undue regulation, the shadow banking system get larger and larger, and to the detriment of community banks, small banks, and the small regional banks. So I think that we have to take a look at both regulatory and supervisory conditions in those. I think that the banking system is well capitalized, perhaps over-capitalized, and this comes from someone, my background is as a financial institutions analyst. I've also taught the history of financial crises, so I am very attuned to the idea that financial stability is important. The pendulum tends to swing from one way, go into overshoot, and that from 99 to 2008, that was an overshoot. And since then, the regulation, our banking system has been constrained. And if we are going to have the kind of the generalized Main Street prosperity that I would like to see over the next few years, it's going to be driven by communities, small banks, and small regionals.
Well, if I had more time, maybe another 5 or 6 minutes would be great. I don't think I'm getting it. Thank you very much. We'd spend a little more time on Basel III because your answer actually reinforces the fact that Basel III puts more capital on the sidelines, which means there's less capital to loan for mortgages or for starting small businesses. But I won't go there. But where I will go, however, is towards opportunity zones. As you know, I wrote the legislation, and opportunity zones was in fact a bipartisan piece of legislation, although it's only supported by Republicans. And the results of the opportunity zones has been astounding. My friends who are mayors, Democrat mayors, support it and celebrate it. My friends who are Republican governors support it and celebrate it, because the fact is simple, that $84 billion committed and invested in opportunity zones have led to real help coming into some distressed communities It's only had less than a 5% gentrification rate, which is really important. But for the housing question, so many folks, mayors around the country said for the first time, because of opportunity zones, they're seeing affordable housing in their downtown areas, and they haven't seen it, John Geddes in Rock Hill, 3 decades. So we know that they've been effective without gentrification. I hope that the administration will spend some time encouraging and supporting the next iteration of opportunity zones. Your thoughts quickly?
Senator Scott, I think they have been a resounding success. And I recently read data that in terms of affordable housing, the opportunity zones have created more affordable housing within the zones than any other federal government program since opportunity zones were created. So I think that it's a fantastic way to address the housing crisis. I think the inner city redevelopment. I think we could think about opportunity zones more in rural areas.
Yes.
So I look forward to expanding and continuing the discussion.
Thank you. My last thoughts will be a comment, not a question. But as a result of the TCJA, we saw the richest Americans' tax burden as a percent of revenues coming in go up. And we saw the poorest Americans as a percent of revenue coming into the government go down. I think the easiest way to say that is to recognize that a single mother, like the one who raised me in 2017, made on average $40,000 a year. Her tax burden, her tax percent went down, her tax rate went down by 71%. That is a result of good policy being good politics. And I hope we keep our eye on the ball of helping the average American have more of their money in their pockets. Thank you.
Thank you, Senator Scott.
Senator Whitehouse.
Thanks very much, Chairman. Welcome, Mr. Besson. Thank you for the meeting we had in my
Democratic
office.
Senator Sheldon Whitehouse of Rhode Island now questioning Treasury Secretary nominee Scott Bessent on Bloomberg.
Shadow fleet, particularly as it is sabotaging our allies' infrastructure in the Baltic, and urged that it is unfair for Chinese manufacturers to be able to underprice U.S. manufacturers by virtue of lower environmental standards. So I just want to give 2 big thumbs ups to both of those notions. As we talked about in my office, I think that the most immediate danger of a major economic collapse is going to come through the insurance industry. We're seeing signs of it in Florida already. The fires in LA are making it worse out in California, but it's occurring nationwide. And as we discussed, where you can't get insurance, you can't get mortgages, where you can't get mortgages, you can't sell properties at value, and that cascades, according to the chief economist of Freddie Mac, into a 2008-style massive economic recession. So I would like to ask first that you get somebody on your team to take a look at this report, which I'd ask to put into the record, from the Senate Budget Committee while I was chairing it, on the non-renewals, price increases, and unavailability problem county by county across the country. And if somebody on your team looks at it and can give you a summary, I would be grateful. And I would actually ask you personally to read this Economist magazine article. I don't think it's complicated.
No, Senator Whitehouse, you gave it to me in your office, and I did read it.
Good. All right, so we're ahead of you. So I just want to make sure.
I will point out to my children behind me, doing your homework's important.
It is important, and thank you for doing that. I think you're the first person in the nominations here who's actually done the reading that has been proposed. So I just think that all of us need to be alert to this problem. I think it's actually started. Ernest Hemingway famously said that bankruptcies happen gradually and then suddenly. I think we're in gradually on a climate change driven insurance crisis that will cascade out into the whole economy. I gave my Environment Public Works colleagues a book this thick. I gave your team a similar book of all the many high-level, serious, peer-reviewed studies that have shown these economic risks. And I just don't think we're ready for it. And I think it's really important that we be ready for it. And I don't want anybody to say that they weren't warned about it. So there's my warning. Last question to you, and I'm going to be treading into an area where I don't know a thing because I just heard about this morning, and I've been the ranking member in the EPW NOMS hearing. So what I did read this morning is that the manner in which you have structured your partnership has enabled you to avoid the payment of nearly $1 million in Medicare taxes, and that the IRS has taken the position that the manner in which you structured your partnership to avoid those Medicare taxes does not actually support avoiding Medicare taxes. And it's probably more complicated of an issue than you and I are going to get through in the next 1 minute and 13 seconds. So we'll follow up with a question for the record. But I just think that when we're dealing with these massive issues of income inequality and threats to Medicare and all of the concerns that I think actually helped propel President Trump to the presidency, it would be extremely awkward if the Secretary of the Treasury were taking advantage of a supposed avoidance mechanism that the IRS, which you oversee, has determined actually doesn't produce that result. And somehow those things need to come into alignment. I don't know why. I suppose the easiest thing would be to go back and pay the Medicare taxes. But again, this is way more complicated than you and I can dispose of in the next half minute. But I do think it's important. I think it's really important to send a message as an incoming Treasury Secretary that everything you do with respect to your personal taxes aligns with IRS guidance.
Senator White, thank you for the question. So it is the firm's taxes, and we are up to date on all our taxes. This matter is not by us, but it is in continuing litigation. If confirmed, I have agreed to shutter my firm, and I have also informed the ranking member and the chairman that I will provision the amount that is lower than the amount that was stated in the press release that went out last night, and I will hold that until the case makes its way through the courts. So once
that seems like an attentive response to the problem, and I'm glad you respected this actually is a problem that needs to be attended to. So thank you.
Thank you. And Senator Wyden has asked if he could add one final question. You get the last one, Senator Wyden.
Thank you, Mr. Chairman. And I gather that after
member, Democratic Senator Ron Wyden now live on
closers. I appreciate that, and I'm going to be very short on that as well. Mr. Bessent, I want to ask about the double standard with respect to tax enforcement in America. The working person, a firefighter or a nurse or somebody who works for a wage, pays taxes with every single paycheck, and the government gets that information. And to a great extent, the ultra-wealthy can have a very different system. They can bring in this whole battery of accountants and lawyers and the like and say, you know, make sure that I don't have a lot of income this year. And then they don't have the same reporting system. And what I have always felt is that ensuring that the government, the IRS, can do tax enforcement to prevent wealthy tax cheating is absolutely crucial to limiting this double standard with respect to enforcement, where you have all this information from people who are working for a wage, and you're trying to figure out what's actually going on with lots of wealthy people. Because to me, the scam is in what's legal. I want it understood that I'm talking about people using their accountants and lawyers and this battery of people. So my question to you is, do you believe that it makes sense for the Congress to give the IRS the resources to collect taxes from people who may be cheating? And we don't even know because it's so hard to run down all this information. Do you believe it's important for the Congress to fund the IRS for that kind of enforcement?
Senator Wyden, I believe that collections are very important, and I believe that the IRS, and again, I haven't been confirmed, I have had no meetings, this is all external. I believe that a large amount of it can be solved by data processing, and we are on the verge of an AI revolution, and I would hope that the AI revolution, much as it has in medical technology, it's pattern recognition, and that my understanding now is that the agency runs on 12 different systems on COBOL, which is the programming language that when I went to Yale in 1980. So I am 100% in favor of that, of updating those systems.
So you talked to me about this in the office, and I appreciated the comments. It's still resources. It's going to be computers, perhaps, not people. But I showed up in the United States Senate when only one person, Pat Leahy, knew how to use a computer. And so we've seen these dramatic developments, and I think you're right, AI is going to shape the debate, but it still leaves the question, we're going to need resources. And again, what you've seen, because we don't have the resources to go after the wealthy tax cheats, people who use the earned income tax credit or something, they're the ones, who get the audits and the like. And I want to see in this position somebody make a commitment to making sure we'll have the resources to go after the wealthy tax cheats who have this unique kind of system. And I would acknowledge your point that certainly it's going to be a challenge in the years ahead with respect to AI and other technologies, but we're still going to need resources. Are you going to support that?
If confirmed, I will come back to you with a plan for upping collections.
On wealthy tax cheats?
Well, you seem to believe that the wealthy cheat more, but I think across the entire income spectrum. So you were saying that the wealthy have this special cachet, and if there is some large mother lode there, then to figure out how to crack that, whether it's through AI or some other means, that I will commit to coming back to you.
Well, let me tell you why it's so important. Former IRS Commissioner Rettig, who was President-elect Trump's last IRS commissioner, testified here that the IRS needed additional multi-year funding because it was, quote, outgunned when it came to auditing wealthy individuals and large corporations. So the view that I have stated today is not just one that I offer, but a former Trump appointee said specifically that the agency was outgunned with respect to resources. So you've indicated that you'll continue the discussion. It's an important one. Thank you, Mr. Chairman.
Well, thank you. And why don't you go ahead with any closing remarks you'd like to make right now, and then I will wrap it up.
I'm going to spare everybody. And
listening to live testimony of Scott Bessent, President-elect Trump's selection to run the Treasury Department. A familiar voice here on Bloomberg TV and radio as we've spent time with Mr. Bessent here at this table on Balance of Power. And of course, you've seen him on other programs. It is expected he will be confirmed. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us here as we continue our coverage of the confirmation hearings throughout this week, all leading up, of course, to the inauguration of Donald Trump on Monday, and we'll have special coverage for you then. Kaylee Lyons, interesting. Scott Bessent going at it with Democrats and Republicans. Not terribly controversial today. There were some questions about taxes. There were some questions, of course, about tariffs, the implications when it comes to inflation and the Fed. But this would be one of the easier walks for, I think we can say, Donald Trump's nominees.
Absolutely. Scott Bessent, widely seen by, frankly, people on both sides of the aisle as a qualified candidate to be Treasury Secretary. This hearing was not likely to make or break his confirmation prospects, as it was expected that he would be confirmed pretty easily prior to him giving answers to the many questions that these 27 senators asked of him today. But yes, it did focus primarily On the two T's, taxes and tariffs, he talked about how he would view it as an economic crisis if the tax cuts of 2017 were allowed to expire. He kind of pushed back on the idea that tariffs were going to translate into higher prices for Americans. And interesting, when pressed by Democratic Senator Elizabeth Warren on the debt ceiling, suggested that while he wants to do a market survey, he's not really sure what the best path forward on the debt ceiling would be. If Donald Trump were to tell him he wants the debt ceiling repealed, he said he'd work with him to do it.
He's clearly there to enact the Trump agenda. It's interesting, I'll tell you, a lot of these conversations sound a lot like the ones that we had with Scott Bessent before he was tapped to be secretary, because we had many of the same questions when it came to taxes and tariffs. The line that endures: extending the Trump tax cuts is, quote, the single most important economic issue in the U.S. today.
And on that note, we want to turn to someone who we also have had many conversations with about taxes and tariffs. Joe Livornia is joining us now here on Balance of Power. He's former chief economist at the National Economic Council during the first Donald Trump administration and is now managing director and chief economist for SMBC Nikko Securities America. Welcome back to Bloomberg, Joe. That was obviously a lengthy testimony from Scott Bessent. Overall, do you think he did a good job pleading his case, or did he leave you with some questions?
No questions. He did a phenomenal job. I knew he was going to do a great job, and it speaks to just his qualifications and the fact he's extraordinarily thoughtful in all of his answers. So I thought it was fantastic.
To what extent, Joe, I'm curious your thoughts on this, because we've talked about this, and we talked about the job before Scott Bessent was selected. To what extent is it his job, and you could really apply this to any of the nominees, to enact the Trump agenda, to do what Donald Trump says? Or is he there to advise the president and say no when he needs to?
No. I mean, the job, you're serving at the pleasure of the president, and all the cabinet nominees are going to be responsible for implementing President Trump's vision for which he got elected for. Certainly there are options, and my experience has been that when you talk to the president, you will give, maybe your top option, maybe your second option, and maybe the third option, which let's say even would be suboptimal, but that is an option. And then the president decides, and then you implement that agenda. So you are there in an advisory, counseling way. And again, you're working for the president. You want to put his agenda in. And it seems to me that this time around, having had a lot of experience, having done this once before, President Trump clearly has the people that have his vision and can best implement such policies.
And if that vision were to include a renewed push to repeal the debt ceiling entirely, Joe, if you were in Scott Bessent's shoes or still advising Donald Trump in the second administration, what would you think about pursuing that kind of policy of removing what is supposed to be a check on fiscal impulses?
Yeah, the thing is that it hasn't been a check on these fiscal impulses. We've gone through dozens of different debt ceiling scenarios, and maybe it depends whoever is in power, but there are plenty of prominent Democrats that in the past have said this debt ceiling is silly, we should get rid of it. And maybe that's what we should do. I don't know. I mean, ultimately, the debt ceiling gets increased, and we just have a bunch of market dislocation that doesn't serve anybody's interest, but it gets passed, it gets increased. So if President Trump wants to get rid of the debt ceiling limit, then so be it. It has to go through Congress. But I don't think the debt ceiling at this point has done much of anything, just has been a distraction for bigger fiscal issues, which clearly we have to deal with given how big the deficits are.
It's interesting. We talked to Maya McGinnis about this recently. She, like some lawmakers, would say, Joe, that at least it's a chance to stop and think. It's a speed limit. It's a rest stop to say, are we sure we want to do this? And we kind of recalibrate. Maybe there'll be some coverage of what our debt levels are at, and it gets people thinking about it. Is that reminder the most important part of having the debt limit?
We're 120. No, because we're 120 debt to GDP, and we ran. In the current administration, we ran nearly a 7% budget deficit to GDP with full employment. So what is that debt ceiling giving us? Or give us stop to think. Just while we're, well, you said that, but I mean, to me, it's not effective in dealing with bigger issues. But again, that'll be the president-elect's decision whether he wants to pursue that. More importantly is where we could figure out ways to raise revenue, and even more importantly, because revenues have been right in line with their long-term average, but figure out ways that we could get rid of some of this waste, abuse, and fraud in the system, which, by the way, the GAO, the Government Accountability Office, the congressional watchdog, you can look at recent studies. There's hundreds of billions of dollars we could save. So I'm optimistic that there are going to be some meaningful proposals on the spending side that actually could help at least stabilize this debt and get us down to where Scott wants to see budget deficits the GDP around 3%. That to me is very doable.
Well, and he reiterated repeatedly throughout this hearing that he views the United States as not having a revenue problem, but having a spending problem. But Joe, to what extent should we be worried about what would happen economically if there were to be a materially large pullback in government spending, when you have the likes of Elon Musk and Vivek Ramaswamy quoting figures in the trillions of dollars, whether or not that's realistic?
Well, remember, it's trillions of dollars, which is huge money, scaling over a 10-year period. The fact, look, the last private GDP has been growing pretty strongly, near 3%, but government spending is growing even faster. If we lower government spending, forward-looking financial markets will react very positively. Equity markets will go up, more capital will be available, there'll be less crowding out, which means interest rates can fall. So if there's a period of time under which there is some friction as we cut spending and maybe lay some of these workers off, government workers, which Elon Musk had mentioned that they would get large, pretty generous severance. Whether that's true or not, I don't know. But the point is, the markets would like anything that gets us closer to some sort of fiscal stability after these massive deficits we've been running the last couple of years will be a huge positive. And if that comes as measured GDP being slightly softer for a period of time, even if that is the case, that to me is a very good trade-off.
Joe, I hate to say we're out of time. I've got less than a minute. When you were at the NEC, though, what would it have been like to have Elon Musk down the hall, breathing down your neck on spending? Would that have been productive?
That'd have been pretty cool because he's very innovative. I mean, the guy is just is a credible entrepreneur among many things. I mean, he's bringing, I think, with Vivek Ramaswamy, clearly a fresher, thoughtful approach to try to get some of these spending cuts through. And as I've argued before, a lot of this to me is bipartisan. When you look at the defense bill and you look at how we do procurement, we waste a lot of money. If we fix that, it's more money we could use for other things.
Come talk to us when we have more time, Joe. It's always great to spend time with Joe Livorni. We appreciate it very much. In the clutch, off the testimony from Scott Bessent, SMBC Nikko Securities America. I'm Joe Matthew alongside Kaylee Lyons. We'll see you back here at 5 p.m. on Balance of Power on Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Thursday, January 16th. And if we take a look at the markets, we've got stocks off their best levels. A bit muted, Tim. We have seen U.S. yields also move down on some dovish remarks from Fed Governor Chris Waller. We'll have more on that in the trade in just a moment.
Yeah, the S&P 500 down 0.2%. The NASDAQ Composite down 0.7%. We do have some breaking news. A redhead crossing the Bloomberg terminal. FBI leaders believe hackers stole months of call and text logs from AT&T, potentially compromising confidential informants. The stolen data, Carol, includes agents' mobile phone numbers and call text records, but not the substance of communications.
Right. But the breach, of course, raising some concerns about the FBI's security practices, continued concerns, I should say, an ability to safeguard its sources, with former agents warning of potential dangers to investigations of national security. Full right through. Just check it out at Bloomberg.com. We'll continue, though, to track that story. Also, in terms of stories we're covering in the next 60 minutes, we've got another batch of strong...
With a developing story in the mining industry, potentially a major deal. Sources tell Bloomberg Rio Tinto Group and Glencore have been discussing combining their businesses in what would result in the industry's largest ever deal and have the potential to reshape the global mining landscape. Right now, we have got ADRs of Rio Tinto. They are down 2.3%. Glencore ADRs surging by 5.8%. But again, Bloomberg News reporting Rio and Glencore have been discussing combining their businesses. Stocks lost steam with the Dow, the S&P, NASDAQ all declining. Bond yields dropped on dovish remarks from Fed Governor Christopher Waller. The S&P now down 17, down 0.3%. Dow Industrials down 139, a drop right now of 0.3%. The NASDAQ Composite Index lower by 0.8%. 10-year at 4.59% right now. The 2-year 4.23%. Keeping an eye on the 30-year 4.83%. Gold up $20 the ounce, 27.16, up by about 0.7%. West Texas Intermediate crude retreating from yesterday's advance. Right now, WTI 78.38, down by 2.3%. Again, repeating our top story, the headline we brought you moments ago: FBI leaders have warned, are warning that they believe hackers who broke into AT&T's system last year stole months of their agents' call and text logs. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, a bunch of stories just crossing the Bloomberg terminal. Earlier this morning, crossing the Bloomberg terminal before the market opened was an update on U.S. retail sales. They broadly advanced in the month of December, including and indicating strong consumer demand to wrap up the holiday shopping season. The devil, though, is always in the details. Here with what you need to know is back with us, Bloomberg News economics editor Molly Smith. She's here in studio. Molly, retail sales, important indicator. What stood out and what does it tell us about maybe the state of the retail group, U.S. consumers, and really U.S. economic growth?
Yeah, this was a pretty strong report. I mean, it was, granted, the headline number a little bit below estimates, but the thing that I really like to look at is what we call the control group measure of retail sales. So it strips out a few other categories, and this is a metric that then gets filtered into how we calculate GDP. And this has been advancing like pretty strongly for the past couple of months. So that really bodes well for fourth quarter economic growth.
How do we feel that they're not adjusted for inflation? Do we need to adjust them ourselves, or are we not as concerned about that given the CPI numbers that we got yesterday?
It definitely makes it a little bit tough because like when you have then a number that is, you know, indicating a positive rate of change, it's hard to tell then, is that because that product was more expensive or because there was greater spending activity? You can obviously, as you just said, Tim, like use the CPI to try to infer some of that yourself. Like we knew that gas prices did rise in the month, so it wasn't surprising to see that that number was positive, but others can be a bit more difficult to tease out. So I think that's where we, you know, look to the PCE measure later this month. It's going to be a little bit, you know, lagged by then, but to get inflation adjusted goods and services spending.
Yeah, I mean, do we care more about the personal consumption expenditures data that's due out at the end of the month? in terms of inflation-adjusted spending? Is that a cleaner, better number?
Oh, absolutely, yeah. And that one as well is also going to give you more services spending as well, because this report, there's only one services category. It's restaurants and bars. And I think the clearer signal on that probably comes more from the PCE report, or even like real-time data when you look at like open table reservations. Like, I think that would probably be the better signal to take when you're looking at that kind of metric.
Okay, help us think about this metric then in relation to the other metrics, because we're still waiting on PCE later this month. We got CPI yesterday. A lot of the inputs, though, that go into PCE, we're going to get as we do ahead of PCE, the Fed's preferred measure of inflation. So do we know what's coming?
Yeah, I mean, it looks like from what the estimates were coming out of CPI yesterday is that most of the economists care about forecasting core PCE. So this is excluding food and energy for the month-over-month rate. And most of those estimates were looking at what we would call a soft 0.2, as in when you're looking out to 2 decimal places, because that's what really matters,
You
not just
economists,
one.
man, move things around a little bit.
Right,
in
we
terms of
can't,
what you're
because one
focusing on.
decimal point just is never going to be enough. So if you're looking at 2 decimal places, we're looking at something in the area of 0.16 or 0.15 rather and up that will round up to 0.2. So that's where a lot of those forecasts are coming in right now.
I mean, we get to an important part in the economic cycle, right, where we maybe have to kind of go out further, right, to kind of get an idea of where we're going in terms of the overall economy. Hey, one thing I wanted to ask you is, when it comes to inflation measures, we're constantly like, okay, that's not the Fed's preferred measure. And then there was a story that caught our attention from Fed Governor Chris Waller, and it's something he has emphasized, others have. It's little followed market-based PCE as one of his preferred gauges of price growth. Chair Powell also recently drew attention to it. So what is that? And why, I get a little concerned when you keep taking these data points and we'll take that out and take that out and take that out. Like, are we then ignoring some things that could be important?
You want super duper core.
I guess
it's
so.
totally fair. A very cherry-picked core, one might say. But I mean, look, I think there are like reasons to be skeptical, but also reasons to be supportive of what they're saying. So market-based PCE is looking at prices that you can actually observe real changes in, versus there are other categories that are estimated that the Fed and other policy, or not policymakers rather, but statistical agencies, that they can't observe the price changes directly, so they need to be estimated, or as we say, imputed. So what the market-based measure does is strips out those ones that are guesses,
right?
Educated guesses, but guesses, and looks at ones that are, we just know these to be factually, actually observed changes. So there's value in that for sure. And what also is that the reason that Waller says that the market-based measure is, a better forward-looking indicator, because some of those imputed measures are just not really good for projecting where inflation is going to go. The thing is, though, those are still very real costs to real people. Like, there's a lot of measures of insurance there. As I'm becoming more intimately aware with, I'm coming up on my first year of home ownership. I just got my renewal policy for my insurance premium, and it went up 34%.
Wow.
And I'm just like, are we saying that we don't care about this?
Right.
Like, that's a real cost to me.
You got to pay it.
I do. And I had the agent shop around. I was like, can you find me something else? And she said, that's the best that's out there for me. So that's just what I'm dealing with. But it certainly doesn't give me comfort to then hear a Fed governor say, well, we can't really observe that in real life. So we're just going to ignore that.
So
yeah,
your 34% increase in insurance aside, Molly.
So you're going to put it aside too.
Yeah.
Nice.
The president-elect takes office on Monday. Carol and I will be here with special coverage of President-elect Trump's inauguration this Monday. What is the economy that he is taking over from President Biden? How would you describe it based on all the economic indicators you look at in the context of a campaign that was really dominated by the narrative of inflation?
Yeah, I mean, look, there's no way around it. Inflation was obviously like the hallmark for, however you can say that in a more negative way, of Biden's presidency.
Yeah.
And that the consumer price index rose a cumulative 20% when Biden was in office. There was incredible gains to be taken from the fact that they got the inflation rate, basically cut down, to a fraction of what it was from the peak without sparking a recession. And in the timeline that they did, obviously a lot of credit of that goes to the Fed as well, not just, the fiscal side. But that's just really not of comfort to the American people. You're still looking at that cumulative 20% advance in prices over the last 4 years. So That is, I mean, but granted, we're still looking at an economy that is powering ahead. You know, we had a pretty good retail sales spending report
The
today.
American exceptionalism, right, that everybody keeps pointing to.
Exactly, and the job market is still holding up pretty well. It's just, I think, you know, the frustration continues to be is that you see this data that points to an economy that looks great on paper, but that's just really not the lived experience for so many Americans, and that's ultimately going to be something still really difficult to square for the new administration.
It's as simple as that, right? You look at the economy, how's it's impacting you, and do you have enough, you know, more or less money that you feel like you have to spend?
I will say we're getting some headlines from Microsoft. They say they are upping the U.S. consumer office cost by $3 a month, Carol. Price increase starts when existing customers renew. The AI Copilot tool is being added to consumer office apps. On the inflation front, price increase is coming from Microsoft.
All right, so there, you know, things like that we keep a watch on. All right, Molly, thank you so much. Molly Smith, economics editor here at Bloomberg News. Now let's get to today's second drop of some big bank earnings. Another round along with business updates from the Wall Street banks. We got today Morgan Stanley and Bank of America. B of A shares, we've seen them trade slightly lower despite fourth quarter profit beat due to high investment banking fees and strong net interest income. And then Tim, Morgan Stanley shares, we've seen them take off, rallying, following in the steps of what we saw in terms of share moves by Goldman, JP Morgan, and Citi. They reported yesterday. Morgan Stanley fourth quarter profit more than doubling, driven by strong trading revenue due to U.S. election volatility.
Here with the details on today's big bank results, we got Bloomberg Intelligence senior global banks analyst Allison Williams here in the Bloomberg Business Week studio. Allison, Bank of America, a little preview for the close. Right now is going to be one of my decliners today. Why are shares lower?
I mean, yesterday I think was when there was a readjustment in terms of, you know, we got the results yesterday. We had strong numbers, and I think Bank of America did deliver, right? They delivered on net interest income upside. The outlook is good. The outlook for cost is good. They're going to have operating leverage, but potentially wasn't the same magnitude.
Was it because they were already up 3% yesterday?
Yeah, I mean, so I think yesterday was kind of baking in, you know, an adjustment for expectations. Like, okay, so we've seen this across the banks. We're probably going to get it from Bank of America. And as I said, they did deliver on it, but not necessarily, I mean, the huge upside that we're seeing at the capital markets focused Morgan Stanley and Goldman Sachs, for example. And so Bank of America, good growth in their wealth management business, but we knew that they had already talked about that, so that was kind of in line. And then, you know, trading and revenue, yes, up, but not up 45%, which is what we saw at, 45% trading growth in Morgan Stanley.
Yeah, I mean, it's the traders, right, that seem to have really done super, super well. I mean, even if investment banking fees are up, I mean, they're coming from, I mean, they're still not where they were when they were hitting record levels, right? And it was pretty anemic, like the reference point.
But to your point, what people are really focused on is this investment banking fee recovery. Investors and managements and bankers have been looking for it, you know, ever since the downturn. And so now we're starting to see things pick up. We saw, I mean, IPOs in the fourth quarter, it really was like a hockey stick. And so, the highest level in a few years. M&A backlog, Morgan Stanley saying today it's like the highest in, 10 to 15 years. Keep in mind that M&A feeds into all these other underwriting businesses. So that's something to be excited about.
Right, you do a deal for a company, you do like other business. I mean, we just had at the start of our broadcast, Rio Tinto and Glencore said to discuss a potential combination.
Right.
And, you know.
Right, and that is, after Trump, we saw sentiment really drive all these banks higher. Part of that is less scrutiny on antitrust. And so that's meaningful, not for banks merging with each other, but for banks advising on more deals. And, we actually in BI, we have we did a deep study led by, my colleague Neil Sipes, looking at M&A in the cycle. It's a cyclical business. And, you can make a really solid argument that we could, M&A as a percent of market cap reached like new lows last year.
Yeah.
And you can make a case for that improving, just as we said, less scrutiny, more sentiment, as people feel a little bit more confident in the economy, the pro-growth economy, as Jamie called it. And really, if you get that improved sentiment, you can start to see more and more deals get done.
What did we learn in the last 36 hours about the way consumers are feeling about the economy? Specifically, Bank of America we often look to because they have such a good view on consumers here in the U.S. What did we hear?
I mean, we heard good things. It's a little hard to tell because the fourth quarter is really bolstered by all that holiday spending.
Yeah, I know, my credit card. I confirmed. That is confirmed.
Confirmed. And
Every
now
January, I'm reminded of that.
And that's why in the first half tends to be the weaker part on the credit side, right? Because people are ringing up the bills. Spending is very strong, but then the bills start coming in. And so, the credit trends in that business are not great for the first half, but, in general, the credit picture is good. We haven't talked about credit costs. You didn't see a lot of headlines. That means that the story is good. Provision's actually coming in a little bit better than expected. When we look at reserves, so keep in mind reserves are thinking about the losses ahead. They're over the life, but they're also based on, economic scenarios, probabilities of those economic scenarios, and they're all telling us that, next year looks stable and solid.
What does the, kind of financial community, investor, analyst community, you guys think when it comes to those capital ratios? I know there's expectations under Trump that even that eases, right? Or it doesn't get amped up more. And so that's why we saw that Trump bump with a lot of these banking names in the last quarter of 2024. What's the view on that in terms of oversight and keeping them in check?
So the view post-Trump, to your point, right? Banks shares rallied. They were very excited. And it's not necessarily regulation rolled back, but less new rules. So the rules you're referring to is a new rule, and it's more punitive for the biggest banks. So again, these capital markets focused banks. So less regulation, more revenue. We saw a $20 billion buyback announced by Citigroup, 14% of their market cap, right? You saw those shares rally, but that is another thing that investors are focused on because the banks have been hoarding capital, if you will, right? Because when the rules were introduced, they were extremely, I don't know if you want to say strict or punitive, but they were going to need a lot of capital. As people started to feel that, okay, these are going to get watered down, there was, comments by Powell that they're going to get watered down. So people felt a little bit better, but really post-Trump, people became very excited. And now with Barr stepping down, Barr was really one of the people that was looking for these banks to hold more capital. And so I think all of that positive momentum, investors are more positive, but managements are also feeling better about, okay, we may feel better about the capital situation.
That said, a headline coming in, you mentioned Citi eliminating more jobs this week. The bank aims to reduce jobs by 20,000 by the end of 2026. Headcount currently 229,000. How should we read into this? The story just breaking about 10 minutes ago.
So, I mean, Citigroup and Wells Fargo are a little bit unique because they are dealing with some regulatory issues, right? So there's a couple of things at Citi. First, they call it the transformation, right? So
just got about 20 seconds.
So getting that in control. But then they are also refining their business and honing their business, right? And so focusing on the parts that are more profitable. We saw the severance charges at Wells. It's not surprising that we're kind of seeing continued honing of the business at Citigroup.
All right, yeah, they continue in terms of that transformation. All right, and Citi shares little change in today's session. Allison Williams, thank you so much. A lot going on when it comes to the big banks. Senior global banks analyst here at Bloomberg Intelligence. All right, coming up next, everybody, the 180 when it comes to politics from Mark Zuckerberg. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg, and sources tell Bloomberg Rio Tinto Group and Glencore have been discussing combining their businesses in what could result in the industry's largest ever deal and have the potential to reshape the global mining landscape. Now, the sources say Rio and Glencore have recently held early-stage talks about a deal. It is unclear whether the talks are still alive. ADRs of Glencore, they are surging now by 7%. Rio Tinto shares down by 2.1%. The Dow, the S&P, NASDAQ 100 index, all in the red. Russell 2000 index up barely, up less than 0.1%. But to put that in context, S&P right now down 5, a drop there of 0.1%. Stocks lost steam with the Dow down 62 now, down 0.1%. NASDAQ down 0.5%. The NASDAQ 100 index down 0.3. The 10-year 4.58%. The 2-year 4.22%. Gold up $20 the ounce, an advance of 0.7%. A retreat for crude oil down 1.9%, 78.54 a barrel. And Bitcoin now down less than 0.1% at 99,658. A settlement has been reached between Rudy Giuliani and 2 former Georgia election workers to decide the ownership of his Florida condominium and 3 World Series rings, which were sought to satisfy a $148 million defamation judgment against him. Recapping, S&P down 9, down 0.2% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This is Bloomberg Business Week. Carol Massar along with Tim Stanovic. Well, the dry, dangerous winds that have kept fire-scarred Los Angeles on edge for days are finally forecast to end, but a lack of rain and another round of winds forecast next week has officials certainly worried. With an update on the fires and also these extreme winds that are really baffling climate scientists, we welcome Bloomberg News weather reporter Lauren Rosenthal. We find her today from New Orleans. Lauren, good to have you here with us. Let's start with what the latest you are hearing on the fire in and around LA.
Yeah, over the next few days, fire crews have a real opportunity to make progress against the Eaton fire, which is burned in Altadena and Pasadena, and the Palisades fire, which has obviously destroyed thousands of homes in the Pacific Palisades neighborhood. As you said, you know, the winds are going to be dying down throughout the weekend. Conditions will still be pretty dry, but the fire warnings that have really had people on edge and have had crews worried are finally lapsing today. So this is going to be an important moment to try to make progress and gain grounds before these winds come back early next week.
Yeah, I think the concern, too, is just a total dryness in the area and a real lack of rain on the horizon. Lauren, how difficult does that make firefighters' jobs? Yes, the winds may have died down or may be dying down. It makes fighting these fires from the air more easy. However, a lack of rain, it's not coming.
Yeah, I mean, normally from April through the end of the calendar year, Los Angeles would have received more than 5 inches of rain, but so far in that same period, we're looking at less than an inch of rain. You know, I talked to a fire scientist this week who told me that if Los Angeles had gotten its usual winter storms, you know, we wouldn't be looking at or talking about, you know, these fires as devastating events. The winds would have rolled through and there would have been, you know, nothing really to feed a fire. The land would have been moist enough to sort of resist. So the dryness has really, you know, driven this tragedy, unfortunately. And, you know, the landscape is primed to burn, which is why it's so important to sort of get out there and try to make progress while the winds aren't a factor.
Yeah, and in a cruel kind of, you know, potential twist, right? There's concerns that when it does rain, that you could see now landslides, difficult landslides in the LA area because so much has been burned and there's nothing really to kind of hold things back. We do want to, Lauren, get to a story that you wrote today, and you talk about the Santa Ana wind gusts that meteorologists posted days before the fires. So accurate, kind of accurate early warnings, but they've got a harder time pinpointing the role of climate change in events like this. Tell us what's going on.
Yeah, for the last few years, scientists have been trying to figure out how in a warming world the winds are going to change. And there was, research that came out a few years ago that actually struck kind of a hopeful note that said that the winds might become less frequent as time wore on, that the season might begin later, but there would be fewer of these outbreaks of sort of vicious, hot, dry winds that help prime the landscape to burn. And then, over time, I think some of those conclusions have sort of been softened a bit. And now scientists think there may be fewer Santa Ana winds in the spring and the fall. But what's happening is that Los Angeles is developing these really dry conditions into the winter months, which is not standard for this region. And, as it grows hotter and drier, that brings increased fire risk in the winter months, December and January, which is right when these winds tend to peak. And based on the research so far, that is not expected to change.
What's the connection between drought and climate change, Lauren?
Yeah, researchers have been doing some really interesting work on this. They think that overall, Los Angeles is probably going to get on average about the same amount of rain it always has, but it is not going to be spread out evenly. It's going to come, all at once, as we saw. The last 2 winters in Los Angeles were incredibly rainy. There was flooding. There were huge kind of outgrowths of plants and wildflowers and brush and grass. Los Angeles turned green and verdant. And then as the city's gone through summer and fall heat waves, all of those plants have died off. That is what's fueling the fires right now. That is what's primed to burn and making it so tough for fire crews who are working in the Los Angeles area right now.
Yeah, and there's actually another story on the Bloomberg terminal about these damaging mega droughts. And there's some new research, a new study out in the journal Nature with a warning climate change is making catastrophic multi-year mega droughts much worse around the world. So yeah, just a reminder of kind of the environment we're living in. Hey, Lauren, thank you so much. Really appreciate it. Lauren Rosenthal, weather reporter at Bloomberg News, joining us from New Orleans. All right, that's a look at what's going on the West Coast in terms of those fires. We want to get to a story, Tim, that's caught our attention. It's about the evolution of Meta and Mark Zuckerberg when it comes to U.S. politics. Kurt Wagner writing this story.
Yeah, you might recall that Meta Platforms had been at the forefront of policing COVID misinformation and suspending a sitting U.S. president from its networks. A lot has changed, though, not just in the last 4 years, but just in the last few weeks. Kurt Wagner is Bloomberg News technology reporter, also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. Kurt joins us from Denver. Kurt, I feel like Mark Zuckerberg has undergone this evolution. You see it in him. It's like a physical evolution, but also an evolution on how he's thinking about the platform and the platform's role in U.S. politics. What's going on?
Yeah, I think the physical changes all happened last year, right? We all saw the hair, the chain, the baggy shirts. We've seen this over the years with his hobbies. He's picked up mixed martial arts and other things.
The really expensive watch.
Really expensive watches, watch collecting, yes. So, but we're seeing it translate to the business here in a really big way. The last couple weeks, as you've both followed, tons of changes at Meta around speech policies, around fact checking. They added a board member, Dana White, the CEO of the UFC, who is a huge outspoken Trump ally, right? A lot of these changes are considered sort of leaning in towards the MAGA movement, leaning in towards Donald Trump and his new administration. And what I wrote about, this morning in our newsletter is that it's, there might be a business reason for Mark Zuckerberg to do this thing, but he's someone who's always been really, really interested in his legacy, who's been sort of protective of his legacy. And I, as someone who's followed him for a long time, find it very interesting that someone who cares so much about how they're viewed would, so publicly tie himself to a president who's as unpredictable as President Trump. And so for me, I think watching this transformation has been sort of shocking, not just about what the company is doing, but what it means for Mark Zuckerberg moving forward as well.
I mean, to be fair, isn't this, I don't know, help me out here. And maybe it's because it's, a tech mega giant. But I mean, when politics shift, you do see companies think about, whether it's their lobbyists or their internal global affairs people change to make sure that, they're going to have maybe a friendlier relationship with the folks in Washington.
Totally. And I think some of this is that, right? And actually someone at the company yesterday made that point to me. They were like, hey, there's a difference between tying yourself to someone kind of personally, and just trying to make a smart business decision by, doing what you can to work with the administration. And in some cases, I would agree, but I actually think Mark Zuckerberg has gone out of his way to do more of the former, right? Which is showing up at Mar-a-Lago twice. He's going to be on stage at the inauguration. He's co-hosting a black tie reception for Trump in D.C. on Inauguration Day, right? These are things that he does not have to do, that Meta does not have to do, and certainly not put him at the forefront, but they're choosing to do that. And so for me, I think given Trump's history, given what we saw from him over his first 4 years, what we know about how he's handled things like, losing the 2020 election, and yet still seeing Mark Zuckerberg put himself personally in those positions, I think feels different than simply saying, hey, we're just trying to make a good business decision by being supportive of this incoming administration.
So are we cynics about this in the fact that it's like very clear and blatant, or is this actually personally something that he is feeling, that he's undergoing, that it's a change in the way that he thinks about content moderation, a change in the way he thinks about politics? Is he moving right like much of the country?
I think it's a mixture of both. Yeah. I don't think anyone could tell you who's not Mark Zuckerberg exactly where he falls on that spectrum. I don't think this is purely a business strategy, right? I think he probably aligns more with some of the stuff that Trump talks about, especially I think as it comes to speech, right? As we've seen over these last couple of weeks, like some real sort of anger about how the company handled things over the last 4 years, anger about how they dealt with the Biden administration around COVID and taking stuff down related to COVID misinfo. So I think some of that is ideological, and that's real, and that's perhaps a change of heart for Mark Zuckerberg over time. But again, I do think an element of this is also just him trying to be a savvy business guy, right? And knowing that, hey, it is better for me, it is better for Meta if I'm have a strong relationship with this incoming administration. And so I think for me, it's probably a mixture of a bunch of different things, those two probably being the top of the list.
Just to kind of wrap up here, you mentioned the party that Mark Zuckerberg and Meta are going to be doing around the inauguration. I mean, what's interesting, and I was reading in this morning, I think it might have been a story in the Times, but just the very prominent names in and around Silicon Valley that are doing things in Washington ahead of and around the inauguration. Very, very involved. It's not everybody, but it is interesting, I think, to watch from a group that we think used to be much more aligned with the Democratic Party.
Yeah, and it's a very, very stark difference than how Donald Trump and his administration were received in 2016, right? You probably recall that some of the CEOs showed up at Trump Tower for like a big meeting, and that was kind of it. Like, they did not want to be part of his committees. They didn't want to be seen, certainly, showing up and advising him, helping him out. Even Elon Musk, I believe, was on a committee and ultimately backed away because of some climate disagreements with Trump, right? And so there was a feeling in 2016 that the tech industry wanted to keep Trump at arm's length. We're obviously seeing a very, very different approach here with this incoming administration this time around. It's not just Mark Zuckerberg, as you say, so it's interesting. I'm just curious to see if they're going to get out of it what they hope, right? Because we know that Trump can be very unpredictable. So are they going to get the return that they're hoping for?
We're all going to be watching and reporting it out. Kurt Wagner, thank you so much. Bloomberg News tech reporter joining us here. Coming up, fixing the many-year-old problem of affordable housing. One billionaire real estate investor shares his ideas. That's next.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks now little change with the S&P 500 index down less than a point. We've got the Dow down 32 for the Dow Jones Industrial Average. That is a drop right now of just under 0.1%. NASDAQ down 80, a decline of 0.4%. The NASDAQ 100 index down 0.2. Russell 2000 index up 0.1%. And again, to put that all in context, S&P 500 index, we'll call it flat on the day. 10-year 4.59%, the 2-year 4.22%, the 30-year at 4.82%. Gold up $19 the ounce, up 0.7%. West Texas Intermediate crude oil down 1.6%, $78.76 a barrel. And Bitcoin back above $100,000. United Health Group shares lower after elevated medical costs persisted in the fourth quarter and revenue missed estimates. United Health operates the largest American health insurer. Right now, United Healthcare shares down 5.3%. Other insurers, including Elevance Health and Humana, also declining. Elevance down 1.3%, Humana lower by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the data are clear that the nation's current housing crisis stems from a lack of home building in the wake of the Great Recession more than a decade ago. Earlier this month, Bloomberg Opinion highlighting in a column how home construction never caught back up to the demand of a growing population. As a result, the United States has a shortage of about 4.5 million homes. This is from Zillow data. Surveys published last year, Tim, showed that more than half of all prospective home buyers were unable to make a move.
Larry Connor is founder and managing partner of the Connor Group. It's a real estate investment firm that owns and operates luxury apartments in high-growth markets throughout the South and the Midwest. The firm has more than $5 billion in assets under management. Larry joins us from Dayton, Ohio. Larry, good to have you with us. Just give us an idea of your footprint. And when we say luxury, what's sort of the demographic that your firm caters to?
Sure. First off, thanks for having me. Yeah, we operate in 18 cities around the country. We go as far west as Phoenix, Denver, Texas, Florida, North Carolina, and obviously here in the Midwest. And so generally it's going to be the renter by choice. But I would tell you, the affordable housing crisis is real. Two, it's just not, for example, on the coast. I think it's in every city across America. But I believe the new administration absolutely has an opportunity to address this.
Well, and I'm curious, well, how do you think that they should address it? Because I think some might say, and I'm not being sassy here, so forgive me, but I know I'm going to get emails. You know, they would say, hey, Larry, you know, what can a luxury real estate investor kind of really tell us about what needs to be done when it comes to affordable housing? So let's start there.
Yeah, I think that's a fair question, Carol. So I would have three thoughts. And by the way, the backdrop is the new administration has the opportunity to unleash the power of America's free enterprise. The problem is the economics don't work for these developers. And I know a lot of developers and work with, even though we don't develop properties. And you say, okay, how so? Three ways. Number one, common sense regulations. Let me give you just one example. In California, there was a recent research paper. Approximately 30% of the total cost of a new home in California is based upon permitting and red tape.
Right.
That's not good. Okay.
Yeah, that's an issue that has been talked a lot about too in the wake of the fires, and even the governor suspending some of that red tape to try to get this stuff rebuilt faster. Go ahead. Sorry, I just wanted to jump in.
Yeah, Tim, you're absolutely right. And in California, the same research, it takes up to 4 years. So, three-pronged attack. Number one, common sense regulations. I think the Trump administration is well equipped to do that. Second, create low interest cost loans. Third, tax credits. But in return, put real teeth in the requirements that these developers, one, build a quality product, and two, over the long term, maintain it to high standards.
So Larry, I hear what you're saying, and I think a lot of people watching and listening would agree that regulations are a huge issue. The challenge, though, is the federal government doesn't really have much control on the regulatory front when it comes to zoning rules, when it comes to environmental policy rules, environmental review rules in individual states. How do you make it work at a federal level if these are local issues?
Fair statement, Tim. The reality is it's a federal problem, it's a state problem, and it's a local problem. But somebody has to start. And the federal government and the new administration, in my opinion, are uniquely positioned to do so. For example, let's go to the low interest rate. Instead of borrowing costs for these developers at 7 or 8%, create an environment where they can do it at 3 or 4%. Now suddenly the economics work, and developers will develop tax credits. Every deal project you do, you need a down payment. Tax credits can help fund that. If you do that, developers will do it. But again, you've got to build a safety net of regulations.
Larry, why do developers always need tax breaks? I mean, you're not going to build in areas where you're not going to be able to sell properties, right? You're not going to do that because it would be a bad business decision. So I'm not sure I ever completely get this. I mean, I think, why not we give tax breaks to the homeowners that actually buy it and send them to do it even more and to kind of make it even possible. We know that when, a homeowner buys a home, they're going to buy a lot of other things. There's a lot of economic activity that is created as a result.
Good question, Carol. Two-part answer. Number one is I agree, give the homeowner some tax breaks. Here's why tax credits. So you're going to build a project in wherever, in Ohio, in Cincinnati, Ohio. Well, if you get a loan, let's say through Fannie Mae, Freddie Mac, that loan is only going to cover, let's call it 75% of your cost. Well, you have to come up with a 25% down payment. A lot of developers can't come up with that. Tax credits, you can actually monetize. You can go out and sell those to investors who will buy those. Net, you can pay for maybe not all, but maybe half to 2/3 of your down payment. That's why, again, you come back to the realities. You got to make the economics work. If you do, you're going to unleash the power of all these developers.
So only got about a minute and a half or so left. 30 seconds, I want to ask you, though, if you could change one thing that you think would really create affordable housing, and it's not just affordable housing, but affordable housing in like major cities like New York and LA where it's expensive and they're needed in those locations, not just anywhere, where people who maybe don't make a lot of money, but they work in New York City and they need a place to live. One change, 30 seconds, what would it be?
Reduce the cost and create the economics for it to work.
Larry, I like that answer because it was short and it gives me time to ask about your mission to space back in 2022. With the 1 minute we do have left, well, give us your outlook on NASA under the next administration and the role of private investors and the role of private companies such as SpaceX, Axiom, the company you went with to space and that to the ISS. What's your view over the next 4 years when it comes to the U.S.'s role in the cosmos?
Well, if you ask my opinion, the future is space. And it's important that the United States lead and control space. Second, I think, again, you partner the private sector with the public sector, and the power of being able to do that can be unbelievable. Me personally, I was fortunate. 17 days in space, extraordinary. Well, what's not known is the 10 months of full training behind the scenes. We were not space tourists. We were private astronauts who had to meet or exceed most of the NASA astronaut requirements.
All right, we got to leave it on that note. Larry, great to get some time with you. Larry Connor, founder and managing partner of the Connor Group. Coming up, everybody, and a little bit later on today, we're going to be watching some developments.
Yeah, looking forward to that. I think it's going to happen very close to the end of our program. That's next, Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week on this Thursday, January 16th. It was really funny. We walked into the studio and you're like, man, there's a lot of news. There's a lot of news coming at us. And get ready, strap yourself in, folks, because through the weekend, but really kicking off next week, as we see Donald Trump sworn in for a second term, obviously, as you know, not consecutive, but anyway, 47th president he will become on Monday, and there is a lot potentially expected maybe on his first day in the White House. So we'll see what that is. But we'll be doing a live broadcast in the afternoon from 3 to 6 p.m. Wall Street time. So we hope you will join us as we cover all of that.
Okay, well, also happening is some big news when it comes to the defense tech world. The startup Anduril Industries, which is weird to call a startup because it's such a big company, it selected Ohio as the location of a sprawling new weapons manufacturing facility that will produce tens of thousands of autonomous systems and weapons annually. It's part of a plan to become a key provider of drones and other tech for the U.S. military. Earlier today, Bloomberg technology co-host Ed Ludlow talked exclusively with the founder of Anduril, Palmer Luckey. Ed also caught up with Ohio Governor Mike DeWine. Ed is on his way back to California, but he took a little detour, and he joins us now
He's
from
still in his suit,
Columbus,
so he must
Ohio.
be still busy.
Hey, Ed, tell us about the big news this morning. Anduril, a company based in Southern California. What does this mean for the startup?
It means a lot for them. I mean, it's a really ambitious and significant industrial project. Initially it's a 5-acre site, and they have an ambition to have it built and then operational by mid-2026, which for anyone that follows as just sort of industrial technology companies, to build a factory and get it up and running that quickly is very hard. But they have a high degree of conviction, and the basics are that Anduril makes weapons. It calls them autonomous defense systems, but they're weapons, high-tech weapons. And, from Ohio's perspective, the state's perspective, this is the biggest project that they've ever signed off on in terms of job creation, payroll creation, space. So it's significant for them and also for America's military industrial complex or supply chain, call it what you will.
All right, and you also caught up with Ohio Governor Mike DeWine. We want to just play a little bit of that conversation for everybody who's listening and watching right now on Bloomberg Business Week. Let's check it out, everybody.
Well, this is the biggest one single deal we've ever seen, with a commitment to bring 4,000 jobs in here that are going to average about $130,000 a year.
In terms of salary.
Yes, in salary. This is just huge for Ohio. And frankly, what we love about it is that this company is still a young company. It's still got relatively young founders and entrepreneurs who are making a big difference. And it's really about the future. This is a dangerous time in U.S. history, very, I think, perilous. And to have a company as nimble and as quick as this that can produce things quickly and to do it right here in Ohio makes us as Ohioans very, very proud.
How did you secure that future? What did you have to do to win the deal with Anduril?
I think people started really paying attention to Ohio, a few years ago when we really started focusing on this. Wright-Patterson Air Force Base that has doubled in size, 38,000 people go in the gate every single day, is not too far from here. That really is the research arm of the Air Force. It's the brains of the Air Force. It's the customer who they will be dealing with. I just had my picture taken with the folks from Wright-Patterson Air Force Base who are working with Anduril. So proximity to Wright-Pat, I think, is very, very important. We've been able to get other companies to come in here, Joby Aviation that makes drones, makes flying, what we think will be flying taxis. So this is about the future. It's the type company that we really want to attract.
What role did incentives play?
Incentives always play a role. But what we have found over the years since I became governor 6 years ago is that incentives don't get you across the line. There will always be other states that have equal or maybe even better incentives. What companies are looking for is, can they find the workforce? Ohio is historically a manufacturing state. We have really put an emphasis in the last 6 years since I became governor on people, making sure that people have the education so that they can have jobs like this. We have a great system of community colleges that are frankly quite nimble and quite quick in turning around and in aligning with companies that come in here and that need certain education done.
All right, that, of course, is Ohio Governor Mike DeWine. There in Columbus, Ohio, with our Ed Ludlow, who we are still speaking with, who is also still in Ohio. Hey, you know, Ed, what struck you about your conversation with the Ohio governor and just the whole story here? You know, manufacturing more in the United States. Just got about 30 seconds here.
Sure. Well, with respect, Governor DeWine dodged the question on incentives, didn't he?
He did.
Andrew and Palmer later told me that it'll be in the hundreds of millions of dollars. But to be fair, Ohio has a history in aerospace and defense technology. It has a history in flight here. There's a lot of talent here. Higher education is a big factor, and they're not alone, right? Intel's building here, Honda's building here. And while that will make for competition for jobs, the state kind of feels like it's got the balance right. There's a question mark about the kind of lasting effects of Biden's Inflation Reduction Act and the CHIPS Act example and the continuation of money that was created by those programs. But what they corroborated is it's a good state to do business and a good place to get moving fast.
Well, also good to catch up with you. As always, safe travels home. Ed Ludlow there, of course, of Bloomberg. For those on TV, the close is coming your way in just a moment. Tim and I continue on Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace with the latest here from CBS News. Israel's cabinet will vote tomorrow on whether to approve the ceasefire deal with Hamas. Lila Dabaka with the Austin for Palestine Coalition in Texas hopes the deal gets done.
We're hoping that this relief comes to them after so many months of suffering. I mean, from being blown to smithereens, literally, from being starved.
CBS's Ramy Inocencio has the latest on the ceasefire deal's prospects.
Right now, the read is that on both sides, they're saying that they are committed to this. Hamas did come out with a statement saying that they are committed to this. One local Israeli news station also said that they believe that this is going to be resolved. If that happens, then it would go to the Security Cabinet.
As some wildfire evacuation orders are lifted in Southern California, State Attorney General Rob Bonta is promising charges for price gougers and looters.
Demand be damned. You must follow the law.
Senate committees are hearing from more of President-elect Donald Trump's cabinet picks, including his choice for EPA administrator, former Congressman Lee Zeldin.
The EPA must be better stewards of tax dollars, honor cooperative federalism, and be transparent and accountable to Congress and the public.
Preparations are underway for Monday's inauguration. That band from Texas is rehearsing. CBS's Christopher Cruz says news that TikTok CEO will attend the inauguration isn't sitting well with one influential Democratic senator.
Virginia's Mark Warner says he isn't pleased to hear the app's CEO will be at the inauguration. He told reporters the irony in all of this is that Donald Trump was the first one to point out there's a problem with the app. The Chinese-owned app will be banned in the U.S. the day before the inauguration unless the Supreme Court blocks the bipartisan law barring it from going into effect.
Ohio Governor Mike DeWine needs to fill Vice President-elect J.D. Vance's Senate seat.
The person I pick is going to really understand Ohio and be an advocate for Ohio. Will they be two of the newest members of the Senate? Yes, they will.
Mr. Baseball, Bob Uecker, has died. His career batting average was only .200, but he shined as a broadcaster, actor, and pitchman for Miller Lite.
You know, one of the best things about being an ex-big leaguer is getting freebies to the game. Call the front office, bingo. And once these fans recognize me, I probably won't even have to pay for my light beer from Miller. I love them.
Bob Uecker was 90. Hollywood director and writer David Lynch has died. His credits include Twin Peaks, Blue Velvet, Mulholland Drive, and The Elephant Man. David Lynch was 78. This is CBS News.
TradeMastersHub.com.
A big advertiser is pulling its ads from next month's Super Bowl.
Its ads always grab attention from Super Bowl viewers.
Thank you, Agent State Farm.
Like a good neighbor, State Farm is there.
But this year, the insurance company says it won't run a commercial during the big game because of the California wildfires. State Farm says it's received more than 7,400 home and auto claims so far. It expects the numbers to shoot up as people return to assess the damage. In a statement, the company says it would rather put the tens of millions it usually spends on Super Bowl commercials back into customers' hands. Deborah Rodriguez, CBS News.
Progresso is launching chicken noodle soup-flavored hard candies called Soup Drops. They'll be available for a limited time this month for National Soup Month at the height of cold and flu season. The drops come in what looks like a regular Progresso soup can. The company calls the candies soup you can suck on. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
And a very good afternoon, everybody. We're 55 minutes away from the close on this Thursday, January 16th. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker Studio. This is one of those days I'm like, meh, in terms of the trade, because there's little changes, certainly on the equity side of things.
Yeah, taking a look at the equity market right now, we are seeing stocks in the green, at least on the S&P 500. The NASDAQ, though, being dragged down by Apple. The NASDAQ composite down 0.3%.
I will say, though, another leg down when it comes to treasuries. We've got the yields all across the curve lower, pretty much at its lowest levels, I should say, of the day.
All right, we're going to have much more from Charlie Pellet in just a minute. Over the next couple of hours, though, Treasury Secretary nominee Scott Bessent in the hot seat today for his confirmation hearing. Josh Green going to join us in just a minute to talk about Bessent's tricky political feat. Hint, it involves a tightrope.
Yeah, exactly. All right, we're going to also be joined by former EPA Administrator Gina McCarthy on the confirmation of nominee Lee Zeldin and, of course, the wildfires that continue to burden the LA area. I want to get her to weigh in on all of that.
Also, population collapse. Elon Musk talks about it.
Yeah, all the time.
Yeah, it could be
years.
A real thing. McKinsey out with a new report on that. We're going to hear from that firm a little later in the program.
All right, let's get to the trade on this Thursday. For that, we turn things over once again to Charlie Pellet.
Hi, thank you very much. And here's what's going on, Carol Master. We have got the Dow Jones Industrial Average lower, little change, down less than 0.1%. S&P higher, little changed as well, up less than 0.1%. The Nasdaq Composite Index, as Tim mentioned, down 0.3%. Russell 2000 Index of small cap shares showing a gain of 0.2%. Stocks lost steam after a solid rally. Bond yields dropped on dovish remarks from Fed Governor Christopher Waller. Right now, we have got the 10-year 4.60%. With the 2-year 4.23%. Monday is Inauguration Day, and Francis Darnold, chief economist at RBC, told Surveillance this morning the incoming administration brings a range of uncertainties about economic policies that were mentioned on the campaign trail.
We're about to get a series of hits to this path that we are on. We are probably going to get some version of a tariff shock. That's inflation up, growth down. We're going to get a shock to the immigration path. That's also going to reduce the amount of labor and probably inflationary. We're going to get deregulation. Well, that might actually be growth up, inflation down.
Francis Darnold of RBC interviewed on Bloomberg's Surveillance. Sources tell Bloomberg Rio Tinto Group and Glencore have been discussing combining their businesses in what could result in the industry's largest ever deal. Right now, Rio is down 1.9%. ADRs of Glencore up 6.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, Treasury Secretary nominee Scott Bessent warned that the U.S. faces an economic crisis that will hammer middle and working class people if the 2017 Republican tax cuts are not extended when a swath of them expire at the end of this year. Bessent making these comments, answering questions at his Senate Finance Committee confirmation hearing today. He also touched on the independence of the Fed during that hearing.
I'm asking you, but let me just say, you don't deviate from our conversation that you think that there should be independence.
I think on monetary policy decisions, the FOMC should be independent.
Thank you. I appreciate that.
Indeed, here at Bloomberg, we've been talking a lot about Scott Bessent in recent months, yet for many people, he wasn't a familiar name, especially those in Republican political circles before Donald Trump nominated him to be Treasury Secretary. Still, as Bloomberg Businessweek columnist Josh Green writes, the macro hedge fund executive beat out several rival contenders to get the nod for one of the most powerful jobs in global economics and finance. He managed to convince both MAGA populists and Wall Street that he was on their side. Josh Green is a Bloomberg Businessweek national correspondent. He's also the author of several books, including the #1 New York Times bestseller, Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency, as well as The Rebels, Elizabeth Warren, Bernie Sanders, AOC, and the Rise of the New Left. Josh joins us from Washington, D.C. Josh, I had no idea Steve Bannon was such an integral part of Scott Bessent's sort of rise in Republican circles. Explain the relationship there and what Bessent did during the first Trump presidency and then over the last 4 years.
Yeah, Steve Bannon he's kind of like a MAGA Forrest Gump. He just sort of shows up and everywhere and everybody. But as I wrote in Bloomberg News this week with my colleague Saleha Mohsen, we did a big profile of Scott Bessent, the likely next Treasury Secretary, basically trying to answer the question, like, who is this guy and where did he come from? I was watching an event at Mar-a-Lago earlier this month, and Trump on stage kind of just stood up there and was like musing to the crowd, like, hey, there's Scott Bessent. Who's ever heard of this guy? And it sort of struck me as like that really is a question to answer about Bessent. And of course, this is what senators are trying to find out. We're trying to find out in the hearings this morning. Bannon came into the picture because Bessent, for most of his career, had been a low profile but very well regarded hedge fund manager for George Soros's fund in 2015, 2016. He launched out on his own. The Key Square Group was his hedge fund. And shortly after Trump's inauguration in 2017, Bessent is a macro investor, which is very curious to learn about these new forces of populism that are obviously roiling governments and markets across the world, and wound up paying to attend a Credit Lyonnais conference in Hong Kong, where he sat next to Steve Bannon, who had recently left the White House. And from what Bannon describes, they basically had a 2-day debrief on all things Trump and have been in touch ever since. And when Bessent made up his mind that he wanted to have a position in the Trump administration, Bannon was one of the people in his ear helping advise him how to land the Treasury Secretary role.
You know, I think about this, Josh. There are a lot of politicians out there, or individuals who kind of start to align themselves or start to play to Donald Trump. But what's so unique about what Bessent did that really made him such a standout to ultimately get one of the top jobs, or at least nominated for one of the top jobs in this administration, upcoming administration?
You know, what stood out to me about him, and I think Saleha, my co-author, also, was that what you've tended to see across two Trump administrations is that the key figures tend to either come from the traditional world of Wall Street or GOP politics, or they come from the kind of hard right Steve Bannon, MAGA, Breitbart news world. And what was so interesting about Bessent is that he emerged out of the Wall Street world, but over the last 7 or 8 years, he's really become a sort of a prominent and well thought of person in the MAGA world also. Bannon was one of his most vocal and outspoken supporters during the long race to become Treasury Secretary. And I think it was the fact that Bessent has managed to win over kind of the two key components of Trump-era Republican Party that explain how a guy like this, who doesn't have the profile of like a Gary Cohn or some of the more famous Treasury secretaries of the past, wound up getting this role.
I love this part at the top of the piece where you quote Steve Bannon, who says he went to Ivy League and has an elite Wall Street pedigree, but he's a true populist. He's MAGA to his core. And then you also quote, just after that, Stanley Druckenmiller, who says Scott has very conservative views, but they are not necessarily orthodox or populist. So what is he?
To me, I just thought that was a great way of framing the kind of chameleon nature of Scott Bessent's political appeal. The fact that he has, the talents and I think the credibility to appeal to a guy like Bannon, while at the same time, having loyalists like Stan Druckenmiller, who's about as credentialed a Wall Street figure as you're liable to find. Now, I think the challenge for Bessent is going to be that, once he's confirmed, I think the expectation is he'll be confirmed fairly easily and becomes Treasury Secretary. You can't be a friend to all people. You have to sort of choose sides, and ultimately you have to do the president's bidding. And so he is going to have some, I think, very difficult situations in the coming years and months where one group is going to want one thing and another group is going to want another. If Trump wants to slap on global tariffs, that's going to make a lot of Wall Street folks very nervous. If Bessent wants to focus on tax cuts and not do any of the tariff or the MAGA stuff, that's going to make people like Steve Bannon upset. And so as we write in the piece, Bessent has a very narrow tightrope to walk, and it's going to be interesting to see, if he is able. He is a newcomer to high-level politics, is able to pull this off.
Well, and I think about it in moments of crisis, whether it's the great financial crisis or, even the pandemic. You need a Treasury Secretary who really figures out what really needs to be done to kind of get us out of a financial crisis. Is this someone who would stand up to Donald Trump should he need to be in terms of policy initiatives?
It's a good question, and it is the question that everybody wants to know in Washington, on Wall Street. And my lame cop-out answer to you, Carol, is that we don't know yet. That's one of the big questions around Scott and, frankly, everybody in Trump's inner circle. Standing up to Trump is difficult. As a senior administration official was telling me when I asked him this question for the piece, he said, you don't stand up to Trump. You don't engineer a confrontation. What you have to do is manage his impulses and help translate what he wants to do into policies and language that isn't going to spook global capital markets. And I do think that because Scott Bessent has such deep market experience, this isn't a guy who's been holed up in the academy thinking about theory. He's been out there running a fairly successful hedge fund. I do think that is a skill set that he possesses. Now, whether or not he can convince Trump to walk a straight and narrow path, well, I would say I don't think anybody's able to kind of quite do that all the time.
Yeah.
But I do know that there's a great deal of relief on Wall Street and Republican circles, and even quietly in Democratic circles, that Bessent is the man going to inhabit this role rather than some of the other choices who I don't think had that level of experience and that degree of trust that they know what they're doing when it comes to managing the levers of the economy.
Can he be a servant to two different sides? Can he be a servant to Wall Street and to MAGA as well? Can he pull that off?
I don't think you can, because on a lot of issues, including issues that are going to be central to what a Treasury Secretary does, the two camps are sort of diametrically opposed, right? Wall Street doesn't want tariffs, the MAGA crowd does. And so, we've gotten a preview of how he might try and manage that. Bessent actually showed up at Bloomberg's DC office last summer and sat down for a long and interesting editorial talk with me and some of my colleagues. One of the proposals he'd mentioned about how you kind of split the baby was, well, maybe we could have a friends and family plan for tariffs. Our allies would get lower rates, and adversaries would get higher rates. So you could already see kind of the gears turning in his mind of, how can I carry out Trump's policies in a way that reflect what he wants without upsetting markets to a degree that it causes a recession, a return of inflation, and so on. And so that's why I think he's going to be one of the most interesting figures to watch in the upcoming Trump administration.
Well, it's a fascinating story to read. Josh Green, thank you so much. Bloomberg Business Week national correspondent. This is Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. Stocks lower across the board. The Dow, the S&P, NASDAQ all declining. Russell 2000 index, though, of small cap shares, it is up now by about 0.1%. To put that in context, S&P down 0.1%, lower by 4. The S&P now at 59.45. The Dow is down 52 points, down 0.1%. NASDAQ is down by 0.5%. 10-year 4.60% with a 2-year currently yielding 4.23%. Spot gold up $19 the ounce, up 0.7%. 27.16 West Texas Intermediate crude oil down 1.7%, 78.64 a barrel. Bitcoin, meanwhile, trading above $100,000 at $100,400 on Bitcoin. Sinead Colton-Grant is Chief Investment Officer at BNY Wealth, and she sees further gains ahead for the S&P 500 index.
The two things that drive stock markets, they're earnings and interest rates. Interest rates have been moving lower, and earnings, we think, are going to continue to expand 10 to 15% this year. That gives us a great base. We actually think on the higher end, the S&P can move up to about 6,600 for the full year.
And again, to put that in context, S&P right now 59.44. U.S. retail sales broadly advanced in December, indicating strong consumer demand to wrap up the holiday season. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. The numbers out of L.A. just absolutely astounding. The flames have killed at least 25 people. Dozens still remain unaccounted for. They've upended life in America's second largest city. Carol, with more than 300,000 Los Angeles County homes and businesses still without power, many schools either destroyed or badly damaged.
All right, for more, we turn now to one of the nation's most respected voices on climate change, the environment, and public health. Gina McCarthy is former U.S. EPA administrator and first White House National Climate Advisor. She's also managing co-chair of America is All In Coalition. It's a group of leaders from all over the United States that supports climate action. She's also operating advisor at Pegasus Capital Advisors and a senior advisor at TPG Rise Climate Fund and a senior advisor at Bloomberg Philanthropies, the philanthropic arm of Bloomberg LP, which is, of course, the parent company of Bloomberg TV and Bloomberg Radio. She is a busy individual, but it's her expertise in terms of climate that everybody is drawing upon. She joins us from Boston, and we do as well. Gina, nice to be talking with you. The last time was at our Bloomberg Green event last fall. We do want to start with the LA fires. We are still waiting to see what the cause was, but yet many would argue that climate change exacerbated the situation. No rain for 8 or 9 months. How are you thinking about LA and what has happened there?
Well, first of all, it's great to be back on the show, and my heart does go out to everybody in this area. It's really feels like I'm watching climate change crisis in action when I'm looking at what's happening in the devastation. Look, 2024 was the warmest year on record globally. And what we saw in California was extreme heat and a lack of rain. We saw 100-mile-per-hour winds, and that just led to a recipe for disaster. And I think we have to be prepared. We have to understand how we can be more resilient, how we can adapt, and look at some opportunities we have to really begin to tackle these issues and stop the climate denial that keeps holding people back. You know, these extreme weather events cost American families more than $150 billion every year. Wow. Isn't it time for us to really recognize this and take action?
Administrator, you said we have to be prepared. Was Los Angeles not sufficiently prepared for this latest round of wildfires?
No, that wasn't what I was suggesting. I mean, it was a confluence of issues that actually led to this challenge. But my point is that we have to, moving forward, understand that with the advent of climate change and with the challenges that we're facing, we have to understand that a shift to clean energy is essential. Reduction in our need for fossil fuels is essential, because we cannot allow this to continue continue to exacerbate. This is not just the start of this problem. This is not yet answered, and it's time for us to develop a strategy in the United States to work with other countries to really start focusing on this clean energy zoom that we need to advance.
Well, you know, the incoming president, Donald Trump, of course, being sworn in on Monday, has talked about more drilling in terms of fossil fuels and certainly seems to be a much more sympathetic ear in terms of the fossil fuel industry. Having said that, time will tell in terms of whatever policies we see. But any increase in reliance on fossil fuels, that's a problem in your view? I'm asking with a question mark.
It's inconsistent with what we know we need to do to address climate change and keep people healthy. That's the major challenge here. And so the good news is that we have answers here. You know, clean energy is literally booming. We now have federal investments that are really changing the game here. We have the bipartisan infrastructure law, the Inflation Reduction Act. All that means that we now have more than 400,000 new clean energy jobs that have already grown just in the past 2 years. Mm-hmm. We have 751 new clean energy projects out there. We're talking about money and jobs in rural communities. We're talking about in low-income communities. And this is our opportunity. This is how we're going to prevent the continued devastation that we're seeing and begin to realize that clean energy is our answer, and it is cheaper for families. I mean, we are talking about great news here on clean energy investments because it is lowering costs, but it's also opening the door to a whole lot more energy choices, like solar, which is 33% cheaper than gas power. That translates into a 95% reduction in utility costs. This is a big deal, and it is an opportunity.
But
it's not a punishment.
But Gina, you know, we rely still so much on fossil fuels at this point, right? And many would argue, even green energy folks will say, you know, we still kind of need a hybrid approach in terms of energy because everything on the alt side, whether it's, and increasingly people are pointing to things like nuclear or geothermal, but even solar and wind, it can't meet the demand that is out there today and that we still need to rely on fossil fuels, unfortunately, some might say, for a few more years.
Well, part of the challenge that we saw, you're absolutely right. I am not suggesting that we reduce our energy demand or our energy in a way that's going to impact families. We need to address our energy challenges, but we can do that over time by increasing clean energy and watching fossil fuels be higher price, which they already are now, and phase out. So this is not an all or nothing, nor is this an opportunity to threaten people's lives. We have to keep energy out there and moving and strong. But we can do that in a way that saves families money. We can do that in a way that lowers our air pollution challenges. We can do it in a collaborative way internationally so that we meet our responsibility to other countries as well. And so I'm excited about the opportunities now. I am not looking to shut the spigot off of fossil fuel tomorrow. I am looking at this as an opportunity to ensure that clean energy can progress because it is the winner. It's the winner for our families, it's the winner for our pocketbooks, and it is certainly a winner in terms of the health and safety of our country and how to move forward.
Do you think
so we just have to continue to be leaders on this.
Do you think we can continue to be leaders on it during the next Trump administration, given the way that the president-elect has been outspoken about his disdain for renewable energy and his support of the fossil fuel industry?
You know, I think it's going to be very challenging. It was very challenging during the Trump administration. But one of the reasons I've been working with Bloomberg Philanthropies, as you indicated, is that we're working on a program called America is All In. It's an unbelievable opportunity for governors and mayors, local community leaders to work together to fill in the blanks when the new administration might want to waver. Look, most of the money in the IRA, the Inflation Reduction Act, is actually going to Republican districts. You can see it. That's where most of the projects are being built. So they would have to be sort of challenged to not realize that we have to move this forward, and it's just as important in Republican districts, if not more so than in Democrat.
Gina, one thing I want to ask you, you're a senior advisor at TPG Rise Climate Fund, operating advisor at Pegasus Capital Advisors. You know, we have spent so much time, I feel like over the last decade, even talking about the intersection of, you know, money from, you know, financial markets, capital markets, the private sector working with the public sector. What are you hearing from, you know, your experiences in working with those folks who manage a ton of money and can put it to work and make things move in the green space? We understand there are commitments, and then there are really strong initiatives that move the needle. And especially under a Trump administration, where I think many would argue too that they don't necessarily want to make the incoming president look at them negatively and get negative attention. So I don't know, what's your hope for the next couple of years? And that intersection of money that moves things.
Yeah, I think you're going to see continued investment in the private sector. No, they may not be standing up and saying, you know, I'm doing this or that, but there's no question about it that we are not seeing private sector investment or public sector money waning. It is actually an opportunity of our lifetime. And I think that, you know, even if President Trump doesn't want to admit it, we are highly dependent now on clean energy. We have to be. We cannot go back. We don't have that as a choice. And the exciting thing is we don't have to. You know, so right now we know that Republican districts are heavily invested in this, as are the Democrats. We know we have governors. We know we have leaders in cities and communities that are going to keep pushing forward. So this is all about the entire United States of America recognizing that we're facing a world challenge that we not only helped to instigate, but can actually become leaders in moving forward. And the companies that I'm working with are all in on making that shift to clean energy and recognizing that that's where we're going to actually make the most benefit for our communities today and build a stronger America tomorrow.
Administrator, 30 seconds left. President-elect Donald Trump's pick to lead the EPA, Lee Zeldin, he did tell a Senate panel that he believes that climate change is real. What are your thoughts on him as the pick? 30 seconds.
Well, that was better than the answers I've seen from other people. Look, Lee Zeldin is a bit of an unknown. I know that he has made some decisions in New York that seem to be very good ones from both an environmental and climate perspective, but I've also seen him do work that seemed very negative around climate change and making progress. So we'll have to wait and see. You know, it's very easy to go in front of a committee and answer questions, or now apparently avoid most of them. But we have to work together. We have to understand this is about people, not politics.
Well, we so appreciate getting time with you again. Gina McCarthy, former U.S. EPA Administrator, first White House National, also White Climate Advisor, I should say, and she's also an advisor, senior advisor at Bloomberg Philanthropy.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got U.S. stocks trading a little change right now. The Dow, the S&P, NASDAQ, all in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. The Dow and S&P are little changed right now. The Dow currently down 25 points. S&P's dropped 3, while the NASDAQ is down by 0.5%. The U.S. 10-year yield fell to 4.6%. Gold is in the green, oil is in the red, and Bitcoin, that's higher by 0.7%. Among the main 11 S&P sectors, leaders were utilities and real estate, consumer discretionary, and tech were under pressure. And leaders to the upside in the Dow, Sherwin-Williams and J&J, while UNH fell 5.9% after earnings and led to the downside. Also after earnings, Morgan Stanley rose 3.6%. Bank of America fell 1.8%. And in other news, Fed's Walrus says that 3 or 4 rate cuts are possible in 2025 if the data cooperates. Wrapping things up, trucker J.B. Hunt reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we are just about 19 minutes away from the closing bell on this Thursday, January 16th. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Broker studio. You heard Bill Maloney and Charlie breaking down the trade here. We are definitely off our highs of this session. I'm looking at the S&P 500, still about almost 400 names, Tim, to the upside. But again, it's kind of, I feel like, an anemic trade a little bit here.
Okay, you mentioned earlier what's going on with yields. Earlier this week, Carol, the yield on the 10-year hit a high of 4.8%. It was the highest going back to November of 2023. It's backed off a bit. Our next guest, though, says not so fast, and we're going to see 5% this year.
All right, so let's see what Max Wasserman has to say. He is, of course, founder and senior portfolio manager at Miramar Capital, registered investment advisor, independent, I should say. He joins us from Northbrook, Illinois. Max, good to have you here with us. We kind of, just like the Fed, seem to be data dependent in terms of the sentiment and the moves in the market environment. How do you see this trade? Are there any clear trends that are emerging in your view, or it's going to be a bit of a wait and see mode because of what we get from the new administration, what we get from economic data, and what that will mean in terms of Fed policy?
Well, thank you for having me on. And I think it's a combination of both. But I think what we've seen is a Fed that is recognizing that inflation's a little bit stickier than they thought, and that you have growth roughly around GDP, roughly around 3%. You had core CPI roughly about 3%. And it really is hard to justify, in our opinion, why they cut so aggressively last year at 50 basis points and then followed up by another 225s. If you have nominal GDP around 5.5%, 6%, we don't think it warranted a cut. So what you're going to see now is, we think, pressure from the new administration. New administration's talking about tariffs, talking about a potential embargoes and restrictions. So we think that's going to be a little inflationary. Also, if you think about immigration policies. So we think that a 10-year treasury around 450, 460, that's great, but we see more pressure pushing it upward as deficits start to rise. Also, the current administration that's coming in, they're talking about cutting taxes even more. I mean, let's not forget, they were trying to get rid of Social Security tax, taxes on tips. So we see a lot of spending taking place, and you may not see the tax cuts or their spending cuts that they're being promised. I mean, already I think Elon Musk is saying $2 trillion was a little aggressive, maybe more towards $1 trillion. And we think as time goes on, there's more risk to the upside in interest rates than there is downside, in our opinion.
What brings rates down ultimately, or is this the new normal? At least based on what happens fiscally over the next few years.
I think a slowdown in the economy. I think if you see demand, there's going to be pressure to refinance. There's a lot of debt that's coming due. You're dealing with about $1.2 trillion annually in debt service cost. So, and a lot of paper is going to be rolling over. So that's going to eat up on some of the federal budget and spending. But I think the only way you really see interest rates coming down is if you see the economy substantially coming down, right? And unemployment ticking up. But again, if you're talking about immigration, right, reform, you're talking about shutting the borders and deporting a lot. That's a lot of labor that's going to be leaving the economy. And that means inflation, we think, to wages. So we think right now you could actually see the 10-year go up to 5.25. And we don't think this market is really pricing in that scenario. And we're not saying that it's going to definitely go there. We think there's a high probability if the current president is coming in, gets what he wants. We just don't see how that brings interest rates down in the next 6 to 12 months.
Right, but higher rates in terms of certainly some of those higher or big tech names that have had quite a run up, you know, or their valuations, right? You've got to do somewhat of a reset. Having said that, you do still like Microsoft. You like Qualcomm at current prices. Is it just a price thing or is it a fundamental thing? Let's start with Microsoft.
Sure, I think it's a fundamental thing, basically. I mean, they're monetizing with ChatBTC, they're monetizing their business, and the prices come down, right? And even though it's a software company, right, they tend to get higher multiples, let's say a hardware company. So I like where they're positioned. They're spending a lot of money. I mean, it's one of our largest positions. We wouldn't be jumping in full boat at this point. We'd look for any further pullbacks, but you could start, in our opinion, you could start a position here. But realizing these are not cheap. Qualcomm, you know, we think is a little bit different story, trading at 15 times earnings. And we think as they expand into the Internet of Things, as they start expanding into the PC market, that could be a new growth potential for them. They're only trading at 15 multiples, and you know, it's been more of a depressed multiple in that stock, and the stock was trading at a much higher rate. So we think here, along with even Google, and all three of these companies we have investments in, we think they have a better upside potential. But the NASDAQ in general, trading at 37 times, right, after 2 big years, is not, and it's really become an interest rate sensitive play. If you think about it, every time interest rates tick up, they come down. So at this point, I think everybody recognizes the growth and they're paying for it. So we think there's very limited upside in the NASDAQ this year, but we think there's a lot of upside in the other parts of the market.
Well, let's talk about another part. Actually, a part that we talked about, the defense part. We talked earlier about Anduril Industries selecting Ohio. They're going to create this sprawling new manufacturing facility that's going to make a lot of autonomous systems and weapons, and they're going to be doing that on an annual basis. But you like some of the kind of old line defense guys, and I'm thinking
those are the ones that Anduril wants to disrupt.
Exactly. So Lockheed Martin or General Dynamics. Why those two versus someone else?
Well, again, we're dividend investors, so we like dividend growth, and both of them have dividends roughly around 2 and 2.5% respectively. If you look at General Dynamics, 20% of their business is the Gulfstream, and they're bringing on more onlines with the G700s, and we see that side of the business really going up. Also, we think the demand for their products. I mean, you're going to need the submarines, you're going to need the strikers, you're going to need the tanks. So we think the demand is not going away, as we do not see global disruption calming down that much, right? We see it in the Middle East calming down, but you still have to do with Ukraine, you still have to do with Asia and Europe. So we think demand. And we think Lockheed. Who's building the planes? I mean, we have to look at the fighters. And if you look at it, there's going to be disruptors. But we like safety, and these two are behemoths, right? And so with you have that dividend growth, and we have the budgets that are put in there, we feel very comfortable, especially they've come down about 10%. So we like them here.
Okay, we got 30 seconds left for you to talk about energy infrastructure, Williams companies. 30 seconds. Why are you optimistic?
I'm optimistic on the pipelines. They're not cheap right now. Both that and ONEOK, we have an investment. They've gone up like 50% last year. But they service the natural gas for like 30% of the U.S. So, and there hasn't been any build out in the pipelines. And if you're going to become more energy independent and more production, you've got to move nat gas throughout the country. And they have that market. So we like them a lot. Paying a nice dividend of about 3.5%. ONEOK is closer to 4%. And they've just had an acquisition of Magellan. So we like the pipelines because you have to move energy throughout the country. And there's been no new pipelines in this country.
All right, Max, thanks so much. Love talking stocks with you. Max Wasserman, founder and senior portfolio manager at Miramar Capital, joining us from Northbrook, Illinois. We are just about 10 minutes away from the closing bell on this Thursday. This is Bloomberg.
listening to Bloomberg Business Week with Carol Nasser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, just about 7 minutes to go until we wrap up the trade on this Thursday afternoon. Carol Nasser, Tim Stenovec, live in our Bloomberg Interactive Broker Studio, bouncing around a lot. I mean, there's a fair amount of volatility. I don't think it's surprising. I think economic news, headlines, there's a lot coming at investors at this point. And I think a lot of questions about what we will see maybe perhaps in that first day of a Trump White House, the first week, the first month, the first 90 days, what we will see and what it means in terms of policy that, as we've heard from our guests, whether they're tax cuts, whether it's tariffs, things that could lead to more inflationary pressures, which potentially would mean less rate moves by the U.S. central bank, and what that means in a reset for some of the valuations that are out there. And the other thing is, let's not forget that for 2 years in a row, we have had some really significant, strong gains in the equity trades, certainly in the NASDAQ, but both in the S&P 500. So at some point, do you say you got to kind of maybe do a little bit of a reset based on fundamentals? This is why earnings is going to be pretty important.
Okay.
Again. What?
Can I talk about something more fun?
That means Tim found an interesting story.
I was listening to you and everything. Totally, I promise.
Really
I was listening to everything you
yeah.
said.
Go ahead.
How did you get to work this morning?
Mass transportation.
Oh, you know what? For $95, you could have taken a 5-minute helicopter ride.
Oh, I was so into it thinking, but man, the delay.
That's one way. Okay, Blade Urban Air Mobility.
How did we miss this story?
It just came out.
Okay, cool.
It provides helicopter flights between Manhattan and 2 nearby airports. Now they're opening up routes to commuters on Long Island and in New Jersey who are willing to spend more to cut their travel time to and from work.
Yeah. The air transport operator will offer a commuter pass for $195 a year, which allows clients unlimited flights to and from the city, as you said, for $95 per flight.
So you pay for the membership,
yeah,
and then you pay per flight.
Yeah. Actually,
Go on. Yes.
If you were trying to get to an airport, from New Jersey, if you had to get to LaGuardia or JFK, which I know I've had to do sometimes for work, and that is depending on when you go. If I do it, I have to book first in the morning because it's easily an hour.
Carol has. I think you were flying from where? South Carolina or no? You were flying from somewhere. I don't remember.
It was a work trip.
A work trip. You flew to LaGuardia or JFK.
JFK.
To get back to New Jersey was longer than the flight.
Yeah, it was longer than the flight.
Exactly. Sometimes that happens.
It was crazy.
Okay, so with this pass, riders can park at either of those airports and then fly to Blade's heliport at 30th Street and 12th Avenue in Hudson Yards. It's kind of close-ish to Hudson Yards. It's not in Hudson Yards. It's right on the water, okay?
Nice.
So you still got to get over the highway to work, just so you know.
Yeah. You still got to deal with some New York City traffic.
The idea here, though, is that this is the beginning of the company transitioning to this all-electric, emissions-free aircraft fleet that will provide commuter routes that will help in that goal. So landing zones can develop throughout Manhattan and Long Island with quiet electric aircraft that would provide more flights for commuters. This is what they want to do, Carol.
What?
I'm so skeptical.
Why? Oh, that this is going to work?
Yeah,
business plan?
There was a helicopter crash, around 50 years ago in New York, and that's why you only have helipads. That's why you don't have helipads on top of buildings, okay?
Yeah.
And two, these eVTOLs haven't been approved by the FAA to do lots of flights in this area.
Yeah.
And three, have you seen them manufactured at scale for a price that makes sense?
Okay, here's why I will not be doing it.
Why?
Passengers are allowed to bring one small bag on board.
That is why you won't do it.
This is where weight really matters. It's
Carol Nasser, who, when she's flying on a plane, always checks a bag, even if it's flight that goes there and back in one day.
I mean, Tim, you're kind of like a Sherpa, though. You've got a big backpack. You've got a bag.
Sometimes they stop me and they're like, you can't bring all this through. I'm well, I'm not checking it. So I stuff it into one bag.
But me, never. It's what do you have, a body in there? It's just crazy.
Sometimes I wonder because also, and this is a little secret, but Carol always exceeds the weight limit of 50 pounds in that bag.
No, I don't.
You do.
Not always.
Oftentimes.
But sometimes it's 49.999.
Or 69.9 pounds when the limit's 70.
There are times I'm moving some stuff around. Hey, you're
she's got
giving
bodies
all
to
my
bring.
secrets.
I'm sorry.
This is what happens when you travel with a colleague. All right, do not go anywhere. We're heading over to our TV colleagues. We're going to count you down to the close on this Thursday. The closing bell starts now.
Full market coverage for you right here on Bloomberg Television.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day. I'm Alex Steele alongside Matt Miller here to help us take us through the closing bell. We got a global simulcast for you. Carol Master, Tim Stenovic, and Bonnie Quinn bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the day. We are sort of picking up steam, say, in the mid-caps or the Russell or the semis, guys, but still big tech underperforming, Carol.
Oh, my God. And, you know, you take a look at kind of the day's movements. We're kind of just all over the place. I call it a meh trade because it's nothing super, super exciting. But you look at the S&P 500 still, Alex, and you still have about 377 names actually gaining some ground despite kind of the overall very mellow trade among the major equity averages.
Yeah, I'm all taking a look at Bitcoin, as I like to do. It's at $100,000 per Bitcoin, up about $800 today. So we are seeing some buying there, Bonnie.
Yeah, and also we had some comments from Fed Governor Waller to the extent that there might actually be more than 2 rate cuts this year if inflation continues on its trajectory. And that sort of sent some good vibes towards the bond market, right? That and the Scott Bessent Treasury hearing.
Yeah, I saw the 2-year yield. If you look at the GIP, it just drops when Waller made those comments on CNBC, saying maybe we could get 4 rate cuts this year. And I think that's really what moved the market in that sense. Nonetheless, after those drops in rates, we didn't see much of a rally in stocks. We didn't see that move ripple across other assets like we did yesterday when you saw rates move. So I don't know if the market really buys it quite yet. You need to see more inflation data, more tame inflation data before the market really eats into it.
And speaking of, there is the closing bell. We're a little bit softer. Look at that NASDAQ. We're closing out about 0.9% lower, down by 174 points. Looking at S&P, off by about 0.2%, and the Dow Jones Industrial Average off 0.1%. Volume pretty mixed when you look at the 30-day average, guys. But the Russell and mid-cap seem to be ending the day a little bit higher, Carol.
All right, I'm going to go back and just remind everybody, still most names in the S&P gaining some ground today, just 124 declining in today's session, Bonnie. So, yeah, still a little bit, you know, of a positive tilt, but, you know, you look at just the major averages at the close here, and it doesn't look like much of anything.
And all that's reflected, of course, in the map of the S&P 500, where you see, you know, information technology, communication services, consumer discretionary, the 3 down sectors. However, much of everything else was higher. It was really kind of a tale of 2 chips as well. We had China putting on a probe onto the export of U.S. chips, and at the same time, you had results out of TSMC that showed more capex spending for chip makers. So that sort of had a push-pull to this market as well.
Yeah, TSM, certainly one of my gainers here. So let's start there. Thank you, Bonnie, for that. You had Taiwan Semiconductor, folks, at its highs up more than 7% in today's session, finishing the day with about a 3.9% gain. We're talking, of course, about the ADRs jumping. The world's largest supplier of made-to-order chips did come out with an upbeat outlook, fueling some hopes of some more AI spending this year. Specifically, they forecast quarterly sales and capex for 2025 ahead of analyst estimates, driven by strong demand for AI hardware. So you really saw a bump up in that one. Having said that, the news out of Taiwan Semi boosted shares of some other semi names, and that included KLA Corp. That one off its highs, at its highs was up almost 9%, but finishing the day with a gain of about 4%. And we did see certainly that one an outperformer. I also want to, I think you guys were talking about it, I think a lot of us here at Bloomberg, we had Richemont hitting a record in the European trade, carrying over to the United States. We're talking about the ADRs up about 17%. I think they also hit a record in today's session. This had to do with the company coming out and talking about its third quarter sales, helping to revive sentiment toward that luxury sector that has really been beaten down. So some upbeat news out of that.
That's you, Carol, right?
Yeah, exactly.
Shopping jewelry at Richemont.
Yeah, I got a kid in college. Yeah, I don't shop for anything for myself anymore. But yeah, so definitely you saw Tapestry. I think you saw Estee Lauder, some other names up a little bit higher. And then just real quickly, I want to squeeze in, we did get about 2 o'clock Wall Street time. You had the news coming out that Rio Tinto and Glencore may be said to be talking about a potential combination, according to folks in the know. Finished off its highs, but you did see Glencore finishing the day up about 2
What do you think of when you hear the word tapestry?
I don't think of Coach.
I think of painting.
Carole King.
Carole
I know,
King.
that's what you
Thank
think
you
of.
very much. I always think of Carole King every time I hear that word.
I think of Martha's Vineyard for some reason.
This is a word association. This will be our next segment.
I thought Carol Massar would also think of Carol King.
I do. My sister Ellen had the album growing up, so I did listen to it. I don't think of Coach. Sorry, Coach.
Yeah, no, me neither. All right, Tim, what do you got?
All right, what do you guys think of when I say worst performer on a points basis in the S&P 500 and the NASDAQ 100?
I say United Health.
Apple.
Oh.
Yeah. That's not the Dow, though. The Dow, you'd be right, Alex.
Okay.
Apple shares falling today, 4%, the most going back to August of 2024. The company extending this recent slump. It's underperforming the market. Lowest going back to November. The stock down about 8.9% so far this month. It's down 12% from those late December all-time highs. No fundamental news today, but the stock has been under pressure. We've reported on this all week over concerns over iPhone sales in the Chinese market specifically. We'll hear from Apple in just a couple of weeks. Bank of America, though, we did hear from them this morning. Shares falling today by just about 1% on the day. You can round that up. The bank's net interest income for the fourth quarter beat the average analyst estimate, though results were partially offset by higher expenses. So why did the stock fall today after this report? Well, we posed that question to Allison Williams at Bloomberg Intelligence. He said that thanks to yesterday's results from the other banks, a lot was baked in terms of expectations to Bank of America. After all, shares were higher yesterday by about 3%. And finally, there it is, Alex, United Health Group down 6% today. Shares fell after elevated medical costs remained in the fourth quarter. Revenue missed estimates. Also, this morning's earnings call was the first time its executives publicly have addressed the December murder of Brian Thompson since that incident. United Health CEO Andrew Whitty acknowledged the frustration with the U.S. healthcare system and said United Health was in a position to help reduce friction for consumers. Shares down 6% today.
All right, guys, I'm just taking a look at the bond market here real quick. We're seeing buying pretty much across the curve, but after yesterday's dramatic move in the bond market, this doesn't feel that exciting. The 10-year yield is down by just about 4 basis points. We did get lower yields when you had Chris Waller on an opposing network talking about how there still could be 3 to 4 rate cuts this year, depending on the data. I didn't say I'm not going to.
I don't care where it happens. I want to tell our viewers and our listeners the info, right? So they can act on it.
All right. I said another network, but whatever, we'll go with that. Anyway, and so you saw pretty much buying there on the long end. Scott Besson not talking today necessarily about where he'll issue on the curve either. That was really front and center for those bond guys, Matt.
Were you wondering about J.B. Hunt?
Always.
Earnings? Let me break them for you. In case you're watching for J.B. Hunt earnings, I'll tell you that fourth quarter EPS was $1.53, and we were looking for $1.63, so missing by a dime. Intermodal revenue was $1.6 billion. The estimate was $1.57 billion, so beating by a smidge on intermodal revenue. In terms of dedicated revenue, and we're going to get Lee Klasko on later to clarify what this stuff means. Dedicated revenue, $838.5 million. The estimate was for $849.6 million. And then total revenue, which is much easier to understand, $3.15 billion. That is bang in line with the $3.15 billion that Wall Street forecast. But the bottom line, Carol, is they missed by a dime at J.B. Hunt. What does that say about the trucking industry? We're going to talk to Lee Klasko about it a little later on in the show.
I just like how you say intermodal. I don't know why, but I just do. All right, so let's move along to some of the interesting stories on our radar. And one that really caught our attention has to do with MBAs, and particularly Harvard MBAs. Apparently the school coming out and saying 23% of jobs-seeking Harvard MBAs who graduated last spring still looking for work 3 months after leaving campus. That share is up from 20% previous year during a cooling white-collar labor market. Remember back then, the figure was 10% back in 2022, according to the school. So they're not the only one, Tim.
Yeah, this is something we saw in the Wall Street Journal, and it's getting a lot of attention today because more than a dozen of these top-tier MBA programs. We're talking about Wharton at University of Pennsylvania. We got Stanford's Graduate School of Business, Stern down at NYU. Vonnie, they all had worse job placement outcomes last year than any other in recent memory.
Well, I mean, it is the McKinsey point, right? The top of the top is where you need to be. And I guess companies seem to be not doing what we used to call the milk round anymore. They don't hire in advance. They just hire at the very end of the year or even after students have graduated. So in some cases, in the highest Ivy League schools, more than 20% of kids or, MBA grads, they don't have to be kids, are still hunting 3 and more months afterwards. What we're keeping an eye on, though, is the cold weather, because it's about to get even colder. And for the TikTok CEO, who apparently is going to be celebrating on Sunday and Monday in Washington, D.C., I hope he has a jacket with him because apparently temperatures will drop to 24 degrees Fahrenheit.
That is an awesome story.
Without the wind chill.
By the way, in 2020, Donald Trump used IEPA, the International Emergency Economic Powers Act, to ban TikTok. Now, 5 years later, he's inviting the CEO of TikTok to the inauguration.
What do you make of it?
To sit with Mark Zuckerberg and Jeff Bezos and Elon Musk and all of the former presidents who are going to go. It's just an amazing.
We're talking about the weather.
They're going to have to keep each other warm.
Oh, and it's going to be cold. It's going to be cold.
It's a weather story, right?
I just want to hear
really
what
cool
Matt.
weather
I
I
want
mean, what am I supposed to say about the weather?
Like, are they going to get out and walk, during the inauguration like presidents have been doing? I don't know.
Supply and demand, heating oil prices.
There's that too.
The grid.
The mitten index, all that
God.
good stuff. All right, guys.
God makes the weather like this.
All right, intermodal.
Which one?
Intermodal. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. A little bit wacky there, but that's how we are on this Thursday. All right, we'll see you again. Same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek, preparing for cold here in New York and across the country over the next week or so. But as Paul Brennan reminded us when I was complaining about this earlier,
it's winter.
It's January is what he said.
Yeah, exactly.
Then he got us to move on to the next thing.
Still
Thumbs
cold.
up from Paul.
Still cold.
Hey, here's something interesting.
I'm listening.
Elon Musk talks about this, or used to talk about it. Never know what he's talking about now. The birth rate in the U.S. and population collapse. Here's some numbers, Carol. U.S. births declined in 2023 to their lowest level in more than 40 years and continued this two-decade trend of Americans having fewer children. Birth rates in countries around the world have been declining, mainly in wealthier nations, as economic instability and uncertainty over events like the pandemic discourage people from having children.
Yeah, while countries including France and China have taken measures to try to encourage couples to have children, U.S. birth rates have been stifled by forces including lack of paid family leave and skyrocketing health costs. I hear this from a whole younger generation. Oh, and people, don't forget, are living longer. These are... and as a result of all of this, you add it up, there's some serious economic implications to it, like GDP per capita in many countries, Tim, are taking a pretty serious hit.
It's the focus of a new report out today from the McKinsey Global Institute. It focuses on this new demographic reality. Olivia White is senior partner at McKinsey & Company. She's also director of McKinsey Global Institute. She joins us from New York. Olivia, good to see you. I think a lot of people are familiar with what's happening in Japan and China. I just mentioned some troubling U.S. stats. I think people get that too. Where else is this happening?
It's happening. So in two-thirds of the world's population lives in countries where the birth rate, or call it the fertility rate, is below what we call replacement. And replacement is the birth rate that you'd need in order for each person to replace themselves.
So I got a wife and 2 kids, so that's essentially the replacement rate?
You're doing your job.
Well, yeah. but am I, though? I'm only doing the replacement rate part. I'm not actually doing growth.
No, well, look, let's start with just the question of how society works and this sort of economics associated with it.
All right, Tim, let's start with the basics. Fair enough. Go ahead.
I think you're doing your job, Tim. Basically, society is built upon populations, that expectations, societal expectations, are built around populations that stay stable or perhaps grow. And part of that is because people are kids, they're supported by their parents are the workers, and then ultimately at some stage you move into retirement and you're supported by the people who are working. And the basic social compact is supported on a mechanics that looks like that. But what happens when people on average start not replacing themselves, having fewer children than them, you start to have more old people than you have workers. And all of a sudden, either you're in a situation where old people actually have to work, they don't have nearly as much money, etc., or you're in a situation where there is a bigger burden placed upon the people who are working. So they have to work more productively or more hours, or perhaps you have to figure out ways of getting more of them. And that's why it really matters.
You know, the one thing help me out here, I understand that global birth rates are going down. individuals, women are having a lot less children than they did 70 years ago. I mean, I'm one of 7. I have 1. So that's a big change in one generation. Having said that, there's more people on Earth. And I wonder in emerging economies, like, I don't know, what's your concerns about all of this? And like, I understand the growth implications, but technology sometimes makes us more productive. So I'm trying to understand, like, what do we need to be worried about?
Well, I don't know if we need to be worried about anything per se, but I think we need to recognize the reality of what's happening and make sure at the very least that we're adapting in order to accommodate it. First on the country level. Then if you think about the global level, and the adapting at the country level is a little bit what I talked about. Now, if you think about the global level, because I think you're right to go there, Carol, what we actually see is, call it 3 waves of countries. They're the developed countries, including China, where we're already at a place where we're starting to get inversions of, as we call it, inversions of population pyramids, so more older people than there are younger people. You then have this second wave of countries. And that's a huge swath of most developing countries in the world where actually the birth rate has already fallen below this replacement rate, but it's happened reasonably recently. So you still have a lot of young people going to be workers, and they're going to get to where we are in the developed world in 20, 30, 40 years, depending on the country. And then at this stage, you have sub-Saharan Africa plus a couple of additional countries. Afghanistan is in that group. Pakistan is in that group, where birth rates or fertility rates are actually well above replacement. But what's notable even there is that they are falling, and they're falling relatively quickly and faster than people thought. We might be okay, but the situation of falling birth rates is something that's rather unprecedented and something that, at least so far, countries don't have experience in turning around.
In the US, it's like the easy explanation that my generation talks about is lack of federal paid family leave and the high cost of childcare. But what struck me about this report is that, like you said, it's happening in 2/3 of countries, many of which we would look at as being sort of models for having really lax policies when it comes to family leave. Is it too simple? Is my explanation for the US too simple?
Yeah, I think there are a lot of reasons to say, look, things like family leave, things that help families get some form of economic credit, those are helpful, right? Maybe they even mean that birth rate doesn't fall as quickly. But as you said, if you look globally and you look over time, it seems really quite compelling to believe that that's not enough and that's not all that's going on. So just, give you a sense of the sweep of time. In 1950, which is the first year the UN started keeping data on birth rates, on fertility rates, Luxembourg was already below replacement. Okay, it went up a little bit in the subsequent years and then went back down. But you then had, coming after it, a large number of countries in Western Europe and then finally the US in the 50s and 60s and 70s, where birth rates actually fell below this replacement rate. So looking and pointing just at things that are the case right now economically surely misses something fundamental in the explanation.
Why should we be talking about this now? Just got about a minute left, Olivia. And I think about, no, I don't mean it as, but I do think watching significant trends. I think Elon's perspective is that, civilization's going to die out.
Gotta go to Mars.
but the importance of why we need to talk about this.
Yeah, so one thing we did is we said, look, suppose that societies want to continue to keep their GDP per capita growth rate of the past 15 years or so. That's basically what sets our ability to have our living standards, to support our older people, to do our best at pulling people into a place of no poverty and empowerment. If we want to do that, given where birth rates are going, in the US, for example, productivity growth has to go up by a factor of about 2, all else being equal. Labor force participation needs to go up by a factor of about 3 percentage points, all else equal, or some combination of these things.
Right.
So that's why it matters, and it matters right now.
Yeah, 30 seconds. Could technology, along with all of us kind of living longer and maybe working longer, could that make up for it? Again, just quickly.
For sure, right? So this is sort of a call for innovation that helps drive productivity and that helps. Productivity is probably not enough in all places, but in the U.S. it might be.
Yeah.
But making sure that we do that in a way that maintains the social fabric that we want.
Interesting. Which maybe means your Waymo makes a lot of sense.
Yeah, no, you don't need that person who would be driving. You will do something else, right?
Exactly. Olivia White, thank you so much. Always fun. Senior partner over at McKinsey & Company, director of the McKinsey Global Institute. Coming up next, the CEO of Hackensack Meridian Health. Lots to talk about with him.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimal financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks struggle to make headway after a solid rally. Bond yields dropped. S&P today down 12, a decline of 0.2%. Dow Industrials down 68, down 0.2%. NASDAQ down 173, a decline of 0.9%. 10-year 4.61% with a 2-year yield 4.23%. Gold up 0.6%, 27.12 the ounce, and West Texas Intermediate crude down 1.7%, 78.64 barrel on WTI. Bitcoin back below $100,000, was trading higher earlier today, right now at 99,826 on Bitcoin. That is a gain of just about 0.1%. Airbnb is pouring millions into a pair of New York political campaigns as it pushes back against short-term rental restrictions that took more than 80% of its New York City listings offline within a year. Airbnb shares today did decline, down by about 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks for that update. Carol, it's already that time of year.
I know. Davos.
She's rubbing her hands together because she's so cold.
Yeah.
Thinking about that trip to Switzerland.
Yeah.
No, you'll be colder here.
I'm going to be here, and it's going to be really cold.
Hey, at the World Economic Forum, issues there are also top of mind for us generally when we talk about healthcare. Certainly the cost, an aging population, pandemics, AI, and other innovation when it comes to treating and preventing disease, a new U.S. president, what it means for regulations, and more. We've got with us Robert Garrett, CEO of Hackensack Meridian Health. The organization calls itself the, quote, largest integrated healthcare network in New Jersey. Here are some numbers: 18 hospitals, 7,000 physicians, more than 35,000 employees, and more than 500 facilities that provide care for patients.
It's a lot. Robert Garrett joining us here in our Bloomberg Interactive Broker Studio. Nice to have you back. Happy New Year. How are you?
I am great. Happy New Year to both of you. Great to be back. Thanks for having me.
Tell me, it is a massive system. There's a lot going on. There's a lot coming at us. Every executive, publicly held, private companies, institution, a lot of questions about 2025, and a lot of it has to do with what we get out of Washington.
Right.
What's top of mind for you when you think about the incoming administration?
So, it's kind of from a healthcare perspective, I believe it's a little bit mixed. So what I look forward to is, and I know that the confirmation hearings haven't happened yet, but if RFK Jr. gets in as our Secretary for Health and Human Services, certainly his focus on reducing chronic disease and on making the food supply more stable, safer. Like even yesterday, the FDA took action and said red dye number 3 needs to be removed from our food chain.
I threw away some sprinkles when I got home.
Yeah, I know.
I did. I was like, okay, well, I guess we shouldn't be eating these.
Exactly. Yeah.
Could have been nice if it brought to my attention, 30 years ago.
Yeah,
but
when they banned it for other reasons.
My wife just rolled her eyes.
It's one of our top questions. We're like, you banned it years ago for XYZ. Why not just get rid of it all? But
exactly,
it's a bigger question.
But if there's a focus there, a focus on drugs, I think that's a positive thing because look, if part of our mission is to transform healthcare, keeping people healthier. We want to reduce chronic disease. What I worry about, with the new administration is I want to be sure that policies are made based on science, whether it's vaccine policies, whether it's...
Are you nervous it will not be if RFK is indeed confirmed?
I'm concerned, that, and my message would be, please, follow the science, because look at what vaccines have done, how many millions of lives they've saved across the world. Look at the research that's been done by the National Institute for Health, for example. And, we've eradicated some diseases. We reduced the cancer mortality rate. We're on the verge of a cure for type 1 diabetes. That all started with research that was funded through the NIH, the National Institute for Health.
If we don't have that research, then what, in your view?
Then it falls on the private sector to continue that research, and that's always very, very difficult because organizations, whether it's pharmaceutical companies or healthcare systems, there's multitude of priorities. I think that public-private partnership that has existed with the NIH is the way to go, and I think the results have been good. And look, is the CDC perfect? Is the NIH perfect? Probably not. But let's not necessarily throw out the baby with the bathwater. So that's my message. So I think there's some positives that could come out of this, but there's some cautions that we need to watch closely.
Do you think that other people in your positions around the country share that same level of trepidation with certain parts, and that is actually being expressed to the administration?
Well, I actually participated in the Wall Street Journal CEO Council meeting, which happened down in Washington about a month ago, and we did send a list of, from the healthcare perspective, we sent a list of our priorities to the incoming Trump administration, and one of them was please follow the science, please support research. So that was part of what we considered a priority for the new administration. So I would have to say, based on that conversation that happened down in Washington, that many of my colleagues do support that, particularly those that are in the academic health system arena, because academics is about education, it is about research.
Do you anticipate, though, that you might have to someday in the near future have a conversation with Elon Musk, who is looking at the efficiencies of government, and especially when it comes to various health issues or the NIH and so on and so forth?
Yeah, I mean, I think, at some point I would welcome that conversation because, listen, I think there are some great ideas that are coming out of the industry to make healthcare, more efficient, more affordable. But I also think there are some basics there that we have to watch, and we don't want to, again, really reinvent the entire system. I think there are some good aspects of American medicine, good aspects of American healthcare. It's not perfect, and I would welcome a conversation with Elon Musk.
Interesting. Okay, let's. I want to talk a little bit about priorities when it comes to the new year, when it comes to sort of the next generation of healthcare. We talk a lot about technology. If there's been sort of one theme that's just dominated our lives and the lives of public investors over the last couple of years, it certainly has been AI. We're told the big promise is in healthcare, drug development, pharmaceuticals. How are you thinking about it?
I think that AI has come a long way in healthcare over the last couple of years. We, as an example, at Hackensack Meridian Health, we have over 300 use case pilots going on right now.
Around
showing
AI?
promise, either use case pilots or AI algorithms that are in development. So around AI, yes.
Anything that's actually being used right now?
Yeah, so let me give you a couple examples. In the area of disease identification, which is really, I think such an important area, we have a use case pilot, an algorithm that's been identified that will help physicians identify advanced and chronic kidney disease earlier. So what that might mean is if they can identify it earlier and start either prevention or start early treatment, it might mean avoidance of years of dialysis or even a kidney transplant. So that's one example. Another good example is in the area of precision treatment. So we have a pilot going on that radiologists are using to help identify breast cancer. And sometimes, a scan does not identify certain types of breast cancer, but with the help of an AI algorithm, they can take the scan, take the information that's being given by that algorithm, and then say, hey, this patient really is at risk, or this patient really does have breast cancer, and we need to treat that patient. So, in that sense, I mean, if you had me here 2 years ago, we wouldn't have been there yet, but at least we're starting to see some real efficacy. The other piece that I would say, and you guys know this pretty well, there's a workforce shortage in healthcare, physicians, nurses, and we're seeing still a lot of burnout. And when we survey our doctors and nurses, the reasons for the burnout is they're doing a lot of tasks that take them away from the bedside. And AI can help with those tasks. They can, as an example, they can summarize notes. And that's been very effective.
Why is it still so tough to see a specialist? I'm not using your hospital system as an example by any means. But
I can get you in, by the way.
But
careful what you wish for.
We had a colleague who had a doctor, I think a week and a half ago, order a test, called back and booked the appointment, and when she called back to confirm, and she's like, oh, that doctor's already gone, left the practice. Like, there's just so much movement, or people leaving, or just there's a lot of stuff, or you can't even get in to see it. In another case, like it's 3, 4, 5 months to see someone.
I mean, there's definitely a shortage of primary care physicians. There's a shortage in certain specialty areas. I mean, we're seeing
why
across the country. Well, I think it's a variety of reasons. I do think that medical schools have not really incentivized physicians in the past to go into primary care. Sometimes it's for economic reasons. The reimbursement for a primary care physician is a lot less than a specialist, and the cost of medical education is so great that a lot of students feel like, well, when I get out, I need to specialize in something. Plus, our system the U.S. healthcare system has been very focused on treatment rather than prevention. But we have a medical school at Hackensack Meridian, and we are doing just the opposite. We're incentivizing students to go into primary care, to go into psychiatry.
How do you provide an incentive for them if they're going to be paid a third of what specialists are paid?
We have a tuition forgiveness program. We have scholarships that are available if they go into those specialties.
It's hard because the salary difference is so different between these specialists and these PCPs. I mean, we're talking like, could be like $500,000 per year difference.
Right, and that's where we have to shift. And in some European countries, like in Switzerland and Germany, where they've been more effective in prevention, there you see that primary care physicians are being paid, compensated, either by government or by the private sector, a lot more than specialists.
Hey, we heard from United Healthcare earlier today. This was the first time they spoke publicly about the killing of Brian Thompson back in December. How do you feel in a position like that about the reaction to that killing, the sort of populist revolt that we saw in the wake of that, the idea of this sort of, folk hero being somebody who took someone down?
Listen, we as a provider, we've had differences with insurance companies, but I would never, ever, advocate violence to resolve that. We sit down and, it's disturbing to me that there is that kind of reaction. I understand people's frustration with insurance companies, healthcare insurance companies, but honestly, we need to work on those problems together. I don't think the answer ever gets solved through violence or even making somebody into a hero because they murdered another human being. I think about it. I didn't really know Brian Thompson, but he had a family and kids, and my heart goes out to them because that was just terrible. I think the better way to resolve this is to try to change policy, try to work in a collaborative way, and I think there are opportunities to do that.
How do we do that? Because listen, Robert, you understand the system so well, and I think increasingly I just see it around the newsroom, talking with friends and family. I mean, I think it just feels like over and over it's getting more expensive, even if you've got a great plan or you call in for coverage, and if you want to stay in the network, again, you're waiting months to see someone. It's problematic.
Well, I think that's where, again, a public-private partnership could come into play.
But what is that? What is that?
What I mean is have government policymakers make it a priority to let's get insurance executives, let's get healthcare providers together with policymakers, and let's understand some of the issues behind the cost. Again, I would love to have the opportunity to talk about prevention, to talk about getting at some of the social determinants of health, some of the social factors that are causing chronic disease, that's driving up the cost. 90% of the healthcare costs in America are related to chronic disease, right? And 80% of what keeps a person healthy has to do with these social factors, talking about transportation to and from doctor's offices, stable housing, food, having access to fresh fruits and vegetables. Those social factors are 80% of a person's health. So,
well, you do wonder if the GLP-1 drugs are going to be very significant longer term. Like, we will find out 10, 20 years from now, right?
Yes.
If they're still in use and there's no serious side effects, whether or not that changes kind of the longer term healthcare.
I mean, that could certainly have a profound effect. So I do think that a better way is to collaborate, to have these discussions, and let's get at some of these issues. And even with respect to some of the issues that are frustrating patients, like pre-authorizations and denial of care. Let's get at that. I would welcome a summit between healthcare providers, even patient advocacy groups, and insurance companies.
Fingers crossed.
Yes.
Because everybody's got a story, and it's unfortunate. Robert, thank you so much. Safe travels.
Thank you so much. Great to see you guys.
Always appreciate having you stop by. Robert Garrett, he's the CEO of Hackensack Meridian Health. I've been there. I've been to the system in Hackensack many times. So just full disclosure, joining us here in our interactive broker studio.
Hey, in just a few minutes, we're going to do a deep dive on Athletic Brewing, the dominant maker of NA beer. First up, though, a business flash and check of how these markets closed. Here he is, Charlie Kelly.
Thank you very much, and here's what's going on. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Turned out to be a down day today for the Dow, the S&P, and NASDAQ. S&P 500 index down 12, a drop today of 0.2%. Dow Industrials down 68, decline of 0.2%. NASDAQ down 172 for NASDAQ, a drop of 0.9%. 10-year 4.61% with the 2-year 4.23%. Gold up 0.6%, 27.12 the ounce, and West Texas Intermediate crude oil lower today by 1.7%. Right now, barrel of crude 78.67. As for the interest rate outlook, Max Wasserman is the co-founder of Miramar Capital, and he was a guest right here on Bloomberg Business Week.
I think the only way you really see interest rates coming down is if you see the economy substantially coming down, right? And unemployment ticking up. But again, if you're talking about immigration, right, reform, you're talking about shutting the borders and deporting a lot. That's a lot of labor that's going to be leaving the economy, and that means inflation, we think, to wages.
Max Wasserman, co-founder of Miramar Capital, a guest right here on Bloomberg Business Week. Just getting word, sources tell Bloomberg the largest streaming services in the U.S. are in talks to broadcast a concert to raise money for victims of the wildfires in Los Angeles. Now, those sources say the organizers of the event, to be called Fire Aid, have held talks with Netflix, Amazon, Disney, Paramount Global, and Comcast about showing it on their streaming services. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Well, if you've been tuning into our program regularly for some time, then you know that I'm a big drinker of non-alcoholic drinks.
Big time.
Big time.
No alcohol, really,
Yes.
that guy's lips.
I was pretty excited to see this deep dive on Athletic Brewing. It's the maker of the dominant NA beer. Just don't call their brews lagers or ales, Carol, or you might run afoul of a certain federal agency. I learned thanks to this piece. It's in the upcoming issue of Bloomberg Business Week. Andrew Zaleski is a contributor to Bloomberg Business Week. I get the sense he sampled quite a bit of NA beer during the reporting of this piece. Andrew joins us from Silver Spring, Maryland. Check out this story on the Bloomberg and at Bloomberg.com/businessweek. Andrew, Carol knows this. Big fan of Athletic Brew, so full disclosure there. I drink it probably every other night.
Do you really?
Oh, yeah.
Wow.
Since the pandemic.
I had no idea.
I drink more of that than I drank of actually real beer when I drank beer back in the day.
Oh, my gosh.
Like,
okay. Interesting.
yeah, it's
You
kinda
just
like-
you like it.
Yeah, I spend more money on Spotify every year than I did like buying CDs when I was a kid. You know, it's like
Totally
the
get
way
it.
things have changed.
Yeah,
It's
yeah,
really.
yeah.
Give us some context here. Just how big has Athletic become?
Well, it's the number one NA beer maker in the country. I mean, it started in 2018 and then very, very quickly skyrocketed to the point where it consumes about 1/5 of the market for NA beer, and at least some valuation numbers value the company at $800 million, which is quite a bit. So, I mean, just in the past couple of years alone, I think it's really moved into that number one spot to become the dominant non-alcoholic player in the country.
Andrew,
and it's only expanded. Yeah, go ahead.
Well, you talk growth, though, and I just, we're all about, size and, scope and context, if you will. So growing a lot, but it's still a really small market, right?
Yeah, the market for NA beer, so the domestic beer market is $117 billion, but overall non-alcoholic beer represents a little more than 1% of it. So it's still tiny relative to, Miller Lite, et cetera, anything that would be considered traditional alcoholic beer. But it is growing. In 2018, when Athletics started, it was like 0.3% of the domestic beer market. Now, non-alcoholic, again, is that little bit more than 1%. So still tiny, but, trending in a direction upward.
Every company's got an origin story. Some are more interesting than others. This one's pretty interesting because it's kind of like a day trader at a pretty big, well-known firm, and then creating this with quite a bit of research on the side. What's the origin story of Athletic? And tell us about Bill Schufelt, who we've interviewed here a couple of times on Business Week too.
Okay. Yeah, I mean, so Bill was a day trader at Point72 Asset Management, the hedge fund founded by Steve Cohen, owner of the Mets. And this was back in about late 2014. He's on this vacation in Jamaica with his wife, and he keeps getting virgin pina coladas, and he's just kind of fed up. He's sitting there thinking, wait, I'm going to have this awesome meal, and I'm going to have to drink this virgin pina colada. Can't there be something else? Can't I just get a great beer that is also non-alcoholic? And it was his wife who actually said to him, why don't you look into doing that? And after several years, he eventually recruits John Walker, who was a craft brewer, and John Walker is the co-founder with Bill of Athletic. And then they start brewing beer. He goes from being, a day trader at a big hedge fund to brewing beer out of John's parents' garage out of 5-gallon Gatorade jugs. And then it just takes off from there. May 2018, they start up their first brewery, and then they gradually begin selling. They go into commercial distribution summer 2018. They get Whole Foods on board. But it all starts with Bill he stopped drinking because he was just so tired of it. And there's a quote in the piece where he says, I felt like it was a ceiling on everything I was trying to do and be in life. So he stops drinking, but he just can't get over the fact that there's no good beer that is non-alcoholic for him to drink, so that he still feels, part of social situations and can just have a good drink that tastes like beer without all the crummy after effects.
Like the taste, but no, morning after kind of thing. Hey, Andrew, one thing, Tim and I have spent a fair amount of time. We often have, alcoholic wines or alcohol, wines, spirits, so on and so forth on air. Tim doesn't often partake,
I'll smell.
Yeah, he does. But he checks it out and stuff. But we have increasingly done a lot of non-alcoholic brands. Some taste okay, some don't. How did they seem to get the flavor right, which not everybody maybe does?
I would love to tell you, but they didn't tell me because it's their trade secret.
No tours, no opening it up and...
Well, I mean, I did a tour of the brewery, but they're not going to tell me exactly how they managed to make a beer that's non-alcoholic but still tastes like one. The way they describe it is they made, about a dozen small changes, tweaking certain things, but that's as deep as they will go on that part, which is understandable, but we tried. I mean, it's in the piece. Tried to ask them how they what sort of method they might use to create non-alcoholic beer. There are a variety of methods out there. One is like vacuum distillation. You use a still kind of similar to what you'd see in a whiskey distillery. One is, reverse osmosis, or you'll use very extreme pressure to separate the alcohol from the drink itself. There's a company that we talked to in the piece, Beagle Puss, their brewery up north, and they use basically a special type of yeast that eats certain sugars, eats certain fermentable sugars. So you end up with a non-alcoholic drink that still tastes like beer, but it doesn't have the same ABV in it. But, Athletic will tell you they made about a dozen small changes to various ingredients, but they don't use reverse osmosis or vacuum distillation or some of these other methods we talk about in the piece. That's as deep as they will go. So if you ever talk to Bill again, you can pry it out. Good for you.
Yeah, I don't know. I was telling a colleague about your story today, and he said sounds like it's like the secret recipe that Coca-Cola uses,
which they keep in a vault.
Yeah,
I've seen the vault, but I haven't seen the recipe.
But Andrew, as your piece shows, the timing of this was kind of perfect because Bill had this idea, and then now the market seems to be growing. There seems to be this different view that a lot of people have about how much alcohol is safe. The timing was kind of perfect, right?
Right. So, I mean, you found the company in 2018, and then the pandemic happens in 2020, and everyone just starts drinking in their homes. And then lockdowns end, and everyone starts venturing out, and they go, what did I just do to myself over the past year or so? And yeah, I think what people are largely realizing is that they're kind of tired of how overconsumption of alcohol makes them feel, and they'd like to cut back a bit. And so the timing was kind of serendipitous in a way, and it worked out well for them because all of a sudden you have this thing that tastes like beer, but it's not going to give you the same buzz as regular beer is going to give you. You can still drink, you can still have the same taste. And then there's all this research coming out now about alcohol's effects on cancer, what it could do there. outgoing Surgeon General Vivek Murthy is now saying, or at least proposing, hey, I think we should probably put some sort of cancer warning label on bottles of booze in America. Ireland, incidentally, is supposed to be doing this in 2026. So I think it's new research coming to light about alcohol's effects, coupled with everyone got so tired of just drinking so much.
Yeah, there's definitely some trends going on. Having said that, how many times does somebody say, come by and say, got a great product and so on and so forth, especially in the beverage or the alcohol or even non-alcoholic area? There's so many choices out there, and especially in a major market like New York or something, it's hard to get your stuff on the shelf. But a chance encounter in Brooklyn actually made it happen, right?
Yeah, Bill gave a sample of Athletic to one of these local buyers of Whole Foods in Brooklyn, and that person liked it so much, Bill got referred to the regional office of Whole Foods, who then said, yeah, this is great, why don't we start stocking it on our shelves? They started in Connecticut at, I think, 7 different Whole Foods in Connecticut, then they moved to Massachusetts, and then distribution gradually nationwide followed from there.
It's pretty amazing. You go into a Whole Foods and look, this is just anecdotal, but you see people's carts and it's like, maybe it's because it's dry January, but
full.
Oh yeah, it's like everyone you see has at least a 6-pack of this in there. How does the company hold on to its lead? I hear Heineken 0.0 is good, Peroni 0 is out. Big players are doing this now. Spindrifts of the world, those are pretty good. How does it hold on to its lead?
I think with the myriad flavors that it creates. I mean, I still have in my basement refrigerator Layback Lime and Salt, which I think is the best Athletic beer out there.
It's a good summer one.
I bought a bunch of it over the summer, yeah. And I just said I want to have this on hand throughout the year. But it's those sorts of flavors that I don't typically see coming from the other places. It's just sort of, the standard beer that I would expect, just non-alcoholic. And then you go to Athletic and you have Upside Dawn and Golden Ale. You have a really good IPA and Run Wild. You have the Layback Lime and Salt. You have all of these different flavors that can kind of give you something for your respective palate. And they just made 2 cocktail inspired beers. Just as we were going to press, the news came out. They made like a Moscow Mule inspired beer. It's not a cocktail, but it has the same taste as the cocktail, just in this non-alcoholic beer form. So I just think they're always just coming up with new flavors, it seems, and that might be one way in which they can maintain a lead.
Well, great story, great deep dive, and certainly a brand that more and more people are talking about. Andrew Zaleski, thank you so much. Contributor to Bloomberg Business Week. Check out his story on the Bloomberg and at Bloomberg.com/businessweek. I'm Carol Master along with Tim Stanovic. You're listening and watching Bloomberg Business Week.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, 7 minutes left to go. We're getting ready to wrap up on the Thursday edition of Bloomberg Business Week. Carol Massar, Tim Stenovec, live in our Bloomberg Interactive Brokers studio. Just a heads up, SpaceX's giant Starship rocket slated to launch for the 7th time today. It's supposed to happen, I think, around 5 p.m. Wall Street time, but I'm looking to see if there's any kind of updates or any footage, but I don't see anything yet in terms of a live shot.
Yeah, the company had planned on launching Wednesday, but announced a 24-hour delay due to weather conditions. Just to remind everyone, the Starship used to be I think the BFR is what they called it.
Whoa.
Yeah.
Big fun rocket?
Big fun rocket, yeah. 432 feet tall. That's what the old name, that was the old name, by the way.
Okay. It's kind of like inside, like the dudes who are probably working on it. And the jets. Yeah.
They're going to deploy 10 dummy satellites.
It's delayed, by the way, until 5:37 p.m. Wall Street time. So
Big
for those
Falcon
who are waiting
rocket,
for it.
BFR.
Oh, okay. Sorry.
Yeah.
Yeah. Okay.
It was later rebranded as Starship.
Yeah, it's a crucial, expected to be a crucial test of its ability to carry and place satellites into orbit. The company, as you said, had planned on doing this yesterday. Looking to deploy 10 dummy satellites designed to mimic the size, shape, and weight of the upgraded Starlink satellites that Starship will be launching in the future.
It's going to be the first time that the world's heaviest and most powerful rocket attempts to deploy payloads. It's an important milestone in readying the rocket for operational use. The dummy satellites will not remain in space. They'll eventually be dragged back to Earth. You might remember this. So this is the 7th test flight. During the rocket's 6th test flight, that was back on November 19th. President-elect Donald Trump was there. SpaceX skipped that booster catch. It cited technical issues. If conditions for the catch are again not met during this launch, the booster will instead land in the Gulf of Mexico.
Coolest part, you might recall too in previous flights, the upper portion of the rocket takes a similar path back to Earth, so that you understand kind of what's expected. Undertaking a controlled plunge into the Indian Ocean, SpaceX will also attempt to use the giant mechanical arms to catch the rocket's super heavy lower portion. That's the same. I mean, it's stunning when you see this, when you think about the engineering involved. It completed during the rocket's 5th test flight in October. I know I say this all the time, but I think about my dad who was involved in all the early space stuff, and stuff went off and you just lost stuff, right? And it, came down into the ocean, but so much was lost. This idea that it comes back or can be caught and reused is just phenomenal.
Well, they're going to broadcast the launch on X, Carol.
Oh, okay.
Which kind of makes sense.
Well, yeah.
You got to have synergies if you own both of these companies.
Elon family.
Yeah, that is set to start in just about a minute at 4:57 p.m. So that's certainly one of the places you can tune in. In the past, some of Starship's launches have ended with explosions and other damage to the vehicle. Emblems of SpaceX's fly, fail, fix iterative approach to engineering. SpaceX said that for this launch, it upgraded the rocket's heat shield, designed to cushion the extreme heat and forces as it plunges through the atmosphere. Other upgrades to the vehicle include this redesigned propulsion system, more powerful flight computer, and additional cameras for flight monitoring, this according to the company.
Yeah, so fascinating in terms of, what's expected. And, I don't think it ever gets old. I think it's really fascinating, and the ability and the advances that continue to come, a lot of it from SpaceX. We did talk earlier about Blue Origin's new flagship rocket lifted off for the first time and successfully reached orbit in a crucial test of the Jeff Bezos-backed firm's ability to challenge SpaceX's ironclad grip on the launch market. So we've seen a lot of activity this week alone.
Yeah, this is New Glenn. It thundered off the launch pad out at Cape Canaveral, Florida, at 2:03 a.m. local time on Thursday. The mission, expected to last several hours, put the company's Blue Ring Pathfinder test satellite into orbit. Carol, do we have picture?
We do. For
the Starship.
Those who are watching on YouTube and on Bloomberg Originals, and I apologize for those who are listening on radio, but we do have pictures of SpaceX's giant Starship rocket that is expected to launch for the 7th time today. As we said, there has been a delay, so 5:37 p.m. is when it's expected. We apologize. It's kind of back and forth, and that's the kind of world we live in terms of technology. We can, but just kind of monitoring it and looking for when it will ultimately take off. It's all, the delay due to weather conditions, so we see that a lot, but we're going to be watching this very closely.
That's what happens.
Yeah.
When you're dealing with space.
Yeah, exactly. And it's going to launch those dummy satellites, as we said, or look to deploy 10 dummy satellites.
What else is on your radar? Stop calling me dummy.
That's like one of those dad jokes, huh?
Yeah. Everybody in the control room laughed.
Oh, I know. There was a story that actually crossed around noon today. This is actually courtesy of the Wall Street Journal. One of America's priciest home listings hits the market for $285 million.
I'll take two of them.
Yeah, right.
The upscale town Manaplan in Florida's Palm Beach County has posted outsized real estate prices. It's attracted big names. Larry Ellison, Sean Hannity, reading this thanks to Catherine Clark out of the Journal. A local developer, Carol, pushing the limits of the values for Manaplan real estate, listing a planned spec mansion for $285 million.
It's a roughly 9-acre compound in the Port Royal neighborhood in Naples, Florida.
Manalapan, sorry, Manalapan.
Yeah. Oh, okay. Yeah.
I haven't been there, forgive me.
The current record, by the way, if you're keeping track for a U.S. home sale, is around $240 million. That was set back in 2019 by the sale of a New York City apartment to billionaire hedge funder Ken Griffin, who is now spending a lot of time in Florida. Right?
The seller of this Manalapan property is Stuart Satter, a local developer who briefly served last year as the town's mayor. He stepped down from the position after only a few months after new financial disclosure rules required that he disclose his income and wealth, which he was uncomfortable providing. He made fortunes as the